real estate transactions. Today being the second day, it is from the income tax facet. I request Ravi Kishore sir to play the initial motto song. Kindly, you need not rise. Kindly place your right hand on the heart.
Yaesha supteshu jagrati, Yaesha supteshu jagrati, Kamam kamam kamamsho, pursho nirvimana, tadeva shukram, tada brahma, tada brahma, tadeva amritamucchate, tasmin lokaha, shataha, sarve tadunatyati kaschanatyati kaschan, etadvaita, 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 etadvaita.
Thank you, sir. Thank you very much. So we'll start the meeting first. So respected Central Council member CA Muppadu Sridhar Garu, a stalwart in the profession, leader by nature, CA Guru, a hearty welcome to you, sir, to this VCM. And indeed, it is an honor to have a resource person, ever smiling, SOS to Vijayawada branch, Shri Abhishek Murali sir, my dear leaders of all branches of Andhra Pradesh, chairman and management committee members, and more importantly, my dear professional colleagues, a hearty welcome to one and all. Indeed, it is a real honor for the Vijayawada branch to host a seminar of this nature. Actually, this VCM is a brainchild of our CM Adukia sir, who wants to interact with all the leaders of the Andhra Pradesh. Without wasting much of your time, I would like to call upon our chairperson of the host branch to give her welcome and opening remarks.
Sir, in the meantime, let the host ask the people to mute it, sir, or let the host mute all. There are some disturbances.
Yeah, I'll do one thing, sir. I'll mute all.
Yeah.
Okay, sir. Okay. And today, I think... One second, sir. Sorry. Oh, right. Sir, as a customary today, I request Madhuri ma'am to give the opening remarks.
A very good evening to one and all. I extend my warm welcome to our Central Council member Muppadu Sridhar sir and my colleague chairmen and all the MC members from all over the AP branches and all the members who are attending the seminar. A special welcome to our today's speakers, Dr. C.A. Abhishek Murali Garu. And firstly, I want to congratulate Vijayawada branch to hosting such an excellent program. And this program shows the unity we are having and the synergy we can gain for having programs like this. And I wish we shall have one program like this every month initiated by each branch every month. And coming to today's topic, if we start discussing about real estate transactions, surely a 3-hour session shall not be sufficient. Thus, this seminar is aptly designed to be a 3-day seminar for 3 different angles. As everyone are aware, yesterday we have discussed the seminar real estate transactions on the RERA facet, and today we are having income tax facet. I'm sure everyone will will agree that even after having years of practice in this area, we come across challenging situations in our day-to-day practice in these real estate transactions, and the changes in the law add up to these situations. This necessitates everyone of us to be updated ourselves, and I'm happy to be part of this continuous learning. Thank you for giving me this opportunity. Thank you again.
Sir, unmute, please unmute.
sorry. That's a wonderful welcome speech, ma'am. Thank you very much for that. And now I request our branch vice chairman Narendra Garu to introduce our CCM, sir. Narendra Garu, sir.
Yes, and just the course. Yes, sir, and welcome all. I feel it's a great privilege to introduce our beloved Central Council member, Vice Chairman of SSCB, Sri Sridhar Muppala Garu, as a Vice Chairman of the branch of Vijayawada branch. He is a passionate person and an altruistic hard worker, bestowed with exceptional organizational networking and administrative leadership skills. CA Sridhar Muppala sir has made noteworthy contributions in whatever the capacity served the profession of chartered accountancy. He has been a prolific speaker at national and international forums, and as an orator for excellence, he has attended and contributed in numerous national and international seminars, and is also hailing from father's family of with a agricultural background. And also Sridhar has realized that education is the biggest opportunity for him to improve his life situation, and he secured 4th rank in the state in his intermediate class 12, and also secured on an all India rank in CA intermediate, and a blend of experience, foresight, technical expertise, and professional excellence worth emulating. After qualifying CA, he started his career in practice firm and developed a practical perspective in the field of auditing, taxation, and consultancy. His also exposure to practice a young age has helped him understand the ground reality of the hardships faced by practicing chartered accountants. Further, gaining exposure in corporate world has improved his execution efficiency and helped him build and manage high performing teams. And Mr. Sridhar has finally, as an entrepreneur, and he has been instrumental in providing stable employment opportunities to more than 500 plus families and across South India, and successfully built an ecosystem of small and medium entrepreneurs who have witnessed a substantial growth over the last decade. His continuous contribution to the profession over a span of 18 years helped him evolve as a people's leader. He has also received Leadership Award for Excellence in Education from the Chief Minister of Andhra Pradesh in the year of 2013. He has also been recognized as the Times of Education Icon Award in the year of 2017. He is also currently serving the Central Council as a Central Council member of the ICAI of the Southern Constituency, and serving in various committees in Finance Committee, Executive level in Finance Committee also, and various committees of ICAI. Actually, finally, he is formally known as, with his surname famous, that Muppala sir. And a grand welcome to Vijayawada branch, sir.
Yeah. A very good evening to one and all. First of all, happy to see all the 12 branches of Andhra Pradesh coming together and conducting. I was just visualizing and even assessing during our year orientation program. In the South India, we have 45 branches. 25% of them, 12 are from Andhra Pradesh. That is number one. And second thing, the member base at Andhra Pradesh is touching the 10,000. More than the local member base, I know that state of Andhra Pradesh has given the members and students for across the South Indian district. So you people really play a role spread across districts. No other state has almost, see, we have almost, when I go by the older districts, we have 13 districts and 12 branches. No other state in the country has district-wise so many branches. So I really appreciate the commitment of the AP people towards that. the effort they have brought in order to build in the infrastructure. Recently, I have been to Guntur, so I was discussing with the team their dedication and passion towards having their own a bigger infrastructure and want to have a role model approach. I really appreciate all the youngsters for that. And especially coming to this program, having a VCM unitedly, yeah, it's the best idea. Because as we know that we are in the profession where subject undergoes a change, knowledge updation is our routine part. Because the change which is inevitable, better to get adopted to that. That is the best principle what we need to follow. And I know the speakers like Abhishek Murali. I really appreciate him because I don't know whether I'll get good morning messages or not. His message of his being a speaker at one or the other places will be getting daily. Really appreciate boss for your contribution at this age and your passion towards the profession. Keep doing the good work. And especially coming to the Vijayawada branch, which has taken the initiative, probably the way ICAI is making us busy with committee meeting, Vijayawada will stop making us, because in the last 3 days, this is the second meeting I'm addressing for Vijayawada branch. So I really appreciate for your energy and enthusiasm. Considering that only, Vijayawada got the first, the best branch award. I know remaining branches are also working towards that. Now, collectiveness and teamwork can give much better result than an individual result. So this program is an example for that. When we try to do it individually, it's always a limited. But when we try to do as a team, resource pooling will really strengthen our approach and the output is much better. So actually, let me tell you, today we all are at Delhi. I'm addressing it from our ICA head office only because we had a committee meeting till 4:30. So we are just done with that. So let me share a few of the developments, what we have at Central Council or recently undertaken. I don't take much time. First and foremost, our beloved President, sir, has undergone a bypass. And let me share, he has recovered in 2 days. He is doing well. And within 3 days, he started addressing all the virtual conferences. So his commitment, yes, it is all we are there with him. And we really appreciate for that. And we are all standing for him. That is the first and the foremost. The second part, let me say, the lot of changes. Because in the recent past, we know there is a little articles crunch that has happened. A lot of people are worried about the numbers. But when compared to the highest what we had in 2014, 1,60,000, the lowest was 48,000 in 2019-20. And again, the numbers bounced back to 1,20,000. So a lot of committees are working towards that, reaching out the people across. Now we are coming back to our previous high. Only thing is probably it may take a year or so by the time the students complete their CA Inter and come for articles. So till that time we have a short-time crunch. The second thing, we are coming up with a CRET. Every time we come up with a CRET, Committee on Review on Education and Training, once in every 10 years. But considering the fast development that is taking place and with the intention of making the CA course on the international, on the international standard, and also to provide an opportunity globally to the members. So the CRET has been bought in 5 years itself. Almost the CRET modulation is over. We have sent for MCA approval. Probably it will come for even public discussion. I'm really sure that we have cut down the unnecessary things. We have made the things simplified and the required approach has been bought in, which attracts the new talent to the profession. That's the second development that has taken place. Now, let me say, ICAI is also planning to revise their infrastructure development because a lot of branches, for example, in the recent past, as we told, that all the property taxes of the branches will be paid from ICAI itself here. That's a small measure, but many other aspects are in discussion for sure, because infrastructure is the first criteria required to start with the activities. And majorly, what we found was, the branches are not having a student data to promote it. We are trying to work out a solution for that, without compromising the confidentiality factor of it, still how to give an access, such that all the activities done by the branches can be promoted. Because I know that many branches are really taking a good level of initiatives. So we'll stand for that and we are working. So we'll get back to you on the conclusion. So entire council, from morning I have been seeing that we have been running here and there. So whatever are your issues, please feel comfortable to bring it to us to the best possible. Within the purview, whatever is there will be solved. So I request every branch, because I know that the time you people have invested to come as part of the branch managing committee and the intention to do something for the profession, I wholeheartedly appreciate for your effort. The legacy, what you are continuing, will stand with you always. Whenever you fall short, don't hesitate. We are always there with you as a team. because now that we have 3 Central Council members from the South, the Telugu state, and 6 from the South, all of us will work as a team and stand and support for you. So let's collectively work and let's do much more events like this. And I wish that AP will host a VCM in the coming days across the South and across the country, so it will bring the laurels to the profession. So we are always there to stand for that. And I really thank all the managing committees of Andhra Pradesh for giving me this opportunity and to be a part of this event. Thank you very much.
Thank you, sir. Thank you, Sridhar, sir, for your nice message. Really, that student data is absolutely useful for the branches, sir. Time and again, we are asking the head office or EDP, whatever the case may be, in different forums. Even the corporates, even the members who are in serving, they are having separate data, but we are not getting the data. So that we are not able to involve them in the CPE meetings or whatever the case may be. That is becoming a major problem. For each and everything, we cannot depend on the SSEB or the BOS for conducting the programs of the students. That's a great initiative by the, yeah, please.
One more thing, sir. Sir, today that all things have become online portal, GST, income tax, or MCA and all. So in the recent committee meeting on the council, we have decided the students should be trained on this. As a part of that initiative, that every Sunday, we are conducting a virtual meet for all the students to train them on these virtual platforms of income tax portal, GST portal, MCA and all, with a question and answer session. To start with, the last Sunday was the first event. Here onwards, every Sunday you will be having the event. So request that among your members and known sources, because the best way if we train the student, the workflow in the offices becomes simplified, especially in this manpower crunch. The training will be really helpful. So request all the branches will be sharing the details of it, circulate among your branches. Let them be participating, because we are bringing a good speakers at the national level that will really enhance the knowledge of the students. Thank you, sir.
Thank you, sir. Really, that's a wonderful thing from the Central Council and from the AP, all branches of AP. We wish to convey the speedy recovery of our President, sir, health as soon as possible. Thank you, sir. Thank you very much for the things and coming here, spending some time and gracing the occasion. Thank you very much.
Thank you.
It's time for the technical session. Now I request Gangaram sir to introduce our ever-smiling Abhishek Murali sir.
Sir, it is a great opportunity given to me to introduce Abhishek Murali. And Sridhar sir is also there. Very nice, sir. Today we are having an excellent session at Vijayawada conducting. And Sri Abhishek Murali, CA Chartered Accountant, is a doctorate. He is a practicing Chartered Accountant Chennai, partner of Victoria Jas and Co. Chartered Accountant, elected Secretary of the SIRC of ICAI for 2 terms, actually. And he is the All India's first rank holder of in CAMA, SEMA, strategy examination, and an All India 17th rank in the SEMA final examination. He also secured All India's 5th rank in the International Taxation examination conducted by CIOT. Dr. C.A. Abhishek Murali is the youngest elected regional council member of the SIRC for the 2 terms, having 6 years, 2016-19 and 2019-22, secured the highest number of votes from Tamil Nadu. He holds so many posts as a chairman and other activities in the capacity as a member of the regional council. And he has the honor of being the youngest elected secretary of the SIRC of ICAI during his term as secretary. The SIRC got the best regional award of the ICAI for the first time in more than 10 years. Dr. C.A. Abhishek Murali is presently as working as the president of the All India Taxpayers Association. Dr. C.A. Abhishek Murali is also the president of the Citizen Awareness Forum of India. He is also founding board member of the ARK Foundation, which plays a key role in providing underprivileged families access to expensive medication at affordable prices. Very notable idea, sir, that one. And not only that, he is having another excellent helping nature in Aravali scheme. Aravali scheme, which is he is collecting the old usable computers and laptops and distributed the same for the underprivileged sections of the society to create computer awareness and literacy. He is an active volunteer of the Aravali scheme and worked hard in hand in hand with various NGOs. And further, he is having actually 5 pages of programs. Introductions are actually, I'm just cutting out.
You can just you can keep it brief, sir.
Sir, it is a 2-hour seminar reading the resume of the Abhishek, sir.
Yes, he actually got very excellent award. That is Abraham Lincoln Excellent Award from the International Peace Council, USA, for his excellence in the tax sector and laudable contributions of the repute by addressing more than 500 seminars during the COVID period. Further, there is no need to express his qualifications, sir. He is having so many qualifications. He is well versed in getting all the degrees of the institutes. Thank you, sir. And further, he is having 2 special books on his credit. One is Overview of the Companies Act, and another Income Tax Ready References and Taxation of Capital Gains. And another book he is having Investors Awareness References published by the Institute of Chartered Accountants of India. And he is a regular contributor of so many articles to the Tax Sutra. He is associated with so many organizations with his social activities, and also a member of the so many clubs and this Cosmopolitan Club and Madras Cricket Club and Madras Race Club, Presidency Club, Mylapore Club, Cosmopolitan Club, Golf, NXC, and further, he is having very fond of, actually, he is, I think, footballer, actually. He is having that aerial golf and badminton, scratch, football, and table tennis player, and he is a keen follower of the game of football. Abhishek is also regularly blogs and enjoys reading. Thank you, sir, for giving this opportunity. I'm really shortcutted some of the areas. I'm very extremely sorry for making this one. Thank you, sir. Thank you.
Thank you, Gangaram Garu. Thank you very much, sir. More importantly, he is the president of All India Tax Practitioners Forum.
Sir. Yes.
That is the main thing. And I request the floor is open for you, sir. Murali, sir, it is all yours.
Thank you, sir. A very, very warm good evening to one and all present here.
Small request, sir. Small announcement. I request each and every member to place your membership number and name on the chat box to mark the CPE attendance. Thank you. And over to you, sir.
A very, very warm good evening to one and all present here. Firstly, the beloved Central Council member, C.A. Sridhar Muppala, sir, who is a very, very dynamic member. I always enjoy speaking with him because his energy levels and his experience across all spheres is something I think we need at the helm of affairs. So I'm very, very happy that sir is there and he is leading excellently. So thank you so much for gracing this occasion, sir. I feel really privileged to have you here. The management committee team of Vijayawada branch, firstly, because they are the coordinators for this. And thank you for inviting me, giving me this opportunity to address the members of all the branches of the Andhra Pradesh state, and all the management committee members, chairpersons of all the branches who have attended today. Thank you so much for inviting me here. And finally, of course, my dear members who have gathered. So the topic that was given to me is a very, very apt topic. And this is an excellent occasion where all the branches are coming together to organize this program. It's an excellent idea, especially the coordinators, Adukya sir, Prasanna sir, who have played a key role in organizing this. So I have to thank them, because having an all-state meet is very, very important in these kind of times, and doing it on this topic, it's a evergreen topic, I always say. Return filing season, you'll usually have July. Tax audit season will be there in September. Then you'll have your branch bank audit, statutory branch audit, which will happen sometime in April for everyone. This is all seasonal work that we have. But whenever it comes to capital gains, it's a evergreen work. Real estate transactions, evergreen work. You get into a public transport, train, bus. The moment you say you are a chartered accountant, immediately people will say, sir, one capital gains doubt I have, sir. Sir, I'm selling one land, I'm selling one property. Can you help me save tax? So that is the impact of this capital gains and real estate transactions, where it has an all-encompassing effect. And the timing of this session could not be more appropriate, because in the last few years, there have been a lot of critical developments when it comes to real estate. You see, there are two angles when it comes to taxation in income tax for real estate transactions. One is the view of the developer, and secondly is the view of the buyer or the investor, so we can say. So let us first start with some critical issues pertaining to the developer. From a developer angle, we are in a very, very interesting scenario, my dear friends. You see, the developers in construction and the real estate industry has been going through some challenging period of time. Initially, there was demonetization. Then there was GST. Then after that, there was a COVID lockdown. Then once again, COVID came and lockdown came. And a lot of people started working from home. Now, finally, when the real estate market has picked up again, there is war in Ukraine. And there is a threat of, looming potential threat of even world war happening. So in all of these scenarios, that field has been struggling because the costs have been going up or the buyers are not there. So recently the real estate sector has picked up. So therefore, naturally speaking, some critical issues are now going to come up for assessment for the very first time. For the very first time, these are the three critical issues that I'll be touching under the developer angle. The first being notional rent on stock in trade under section 23(5). This was a section which was introduced in assessment year 18-19 and subsequently amended in 1920. It is coming up for all your reopening cases, scrutiny cases, everything is coming up for the first time now. So what is this? This notional rent, I will tell you, is the first big gun which has been held to the heads of persons in the real estate sector. I will tell you why. Now, we are all accountants here. We are either chartered accountants, qualified, or I'm sure there must be some articles also watching the program. So therefore, we are all taught from the very first day that we enter into articleship or when we start accounts, that whatever business that assessee is engaged in, then whatever inventory he has pertaining to that, or whatever assets he has pertaining to that business will be considered to be a stock in trade if it is used in the sale of transactions. So if I'm in the business of selling cars, then the car is not my fixed asset. It is my inventory. If I'm in the business of selling furniture or maybe even screws, then all of that will be part of my inventory. It will not be expensed off. It will not be capitalized. Similarly, if I'm in the business of real estate, then naturally, whatever stock I have is the immobile property, flats or commercial properties that I'm holding in hand is my stock in trade. So now, what is this amendment they have brought in assessment year 1890? They said, now, where any property consists of building or land held as stock in trade, then for 2 years, we will give you relief. First, they said 1 year. Then after everyone protested, they said 2 years. We will give relief. What relief, sir? It is technically house property that you own. So therefore, income from house property, you should offer notional rent. Now, already this real estate sector has been going through so many challenges. They don't have liquidity. They are paying. Now, what they are saying, I am building, taking loans after great difficulty. I am constructing a commercial building or a residential building. Market economic slowdown is there. Nobody wants to come and buy and occupy. Work from home is there. Everybody is going away from the cities. So now I am struggling. I am trying to sell all my properties. Nobody is coming and buying. I am putting big advertisements, incurring heavy expenditure to do this. So after completion, finally, I am hoping that I can sell, but still I am not able to sell. Government is now coming and saying, sir, you have to pay rent. I say, sir, I have not sold the property. It is my stock in trade. It is all empty. Nobody has come. 24 apartments. Everything is empty, sir. 24, no? Up to 2 houses you can keep as self-occupied. Balance 22, you please offer notional rent on that. Already this person does not have funds. Now he has to pay tax on a notional rent. As I told you, the entire assumption is that when you are in the business of real estate, naturally it will pertain to be stock in trade. Is it not a capital asset? It is not. Generally, capital assets only will offer the rent, but this they brought about. Obviously, when this change was brought, we all objected to it. We said, no, this is highly unfair. The real estate sector is struggling, and if already they are not able to make money, you want to tax them on notional basis. So they said, okay. We said we'll give 1 year relief. Now we'll extend it to 2 years relief. So now they are saying it will be for 2 years relief. They are saying. So for first 2 years after the flat is completed, once the completion certificate is issued, from that up to 2 years, they are giving relief where you don't have to offer notional rent. But however, after that, if the flat or the commercial property remains unsold, then a notional rent has to be offered on this. Naturally, we have to understand what is the story behind this amendment. In my view, it's very, very critical because this was not at all an issue till very, very recently. In fact, even in 2015, there was a Supreme Court decision. And the reason I am talking about this decision, I will tell you shortly. In 2007, the Gujarat High Court first took up this matter, where they said, when it comes to income from house property, taxation does not happen on the basis of whether it is held as stock, whether it is a capital asset. It happens basis of ownership. So therefore, the moment you are holding it, automatically you become the owner. And when you become the owner of it, you have to operate under income from house property. This was held in Neha Builders, but not much heed was paid to it because in 2015, a Supreme Court decision came in Chennai properties. And I can tell you this because in the reopening cases which have started now, all assessees are quoting Chennai properties. I will tell you why this Chennai properties is different. In Chennai properties, the same issue came up where they said you have let out the house property. So therefore, you must tax under income from house property. They said, sir, what about the house property that's not let out, it's all empty. They said, then notional rent has to be offered. This Chennai properties, they went all the way to the Supreme Court and finally Supreme Court held in favor of the assessee. They said, no need notional rent. But what is the issue? Let us try to understand the issue here. The basis what happened, the Supreme Court looked at the memorandum and articles of association. They saw the objects. Under the objects of the business, it was not only to construct flats and sell the flats, it was also to let out the flats. So it was also to let out flats. So therefore, if your business objects include let out flats, then it need not be offered under income from house property. It will become part of your business income. Income from house property means you get 30% standard deduction. So if you want that benefit, you can avoid including this in your objects. But if you're not sure when you will sell, which is what is the situation with 90% of the developers these days, better for you to include in your objects, saying letting out properties is also part of your ancillary business. So therefore, at least you need not offer notional rent on this even after 2 years. So this is a tax planning opportunity for you, where you can say that it is in fact object of the business is letting out also additionally to selling the properties. Then you can avoid this notional rent altogether. But the critical reason why they brought this is this unsell housing decision, where the Delhi High Court and subsequently the Supreme Court also ratified, saying it should be done purely on the basis of ownership. It should not be done on the basis of intention. They said it should be done based on the ownership. Now here I'm going to ask you a question, a follow-up question for this. Now one builder, he has spent a lot of money. In fact, this is a practical thing. It happened with one of my clients. In Chennai, you have Mount Road, which is the very, very famous road which runs through the entire city. So one of my clients has a huge property on this Mount Road. So he started constructing on this property. Lot of expenses went on for several years. And finally, after 5 to 6 years, he finished the construction of this. And he was about to start selling it and letting it out. So this was the nature that he was planning. When suddenly this completion happened, Metro Rail project was announced. And right in front of the building, they built a station. One station came up right in front of the building. So what they said, no cars can come in because there's a big hole which is there. They're building the station, full drilling work is happening, full dust is there. Nobody wanted to take on rent this property that he finished construction after 5 to 6 years, taking heavy loans. He is trying to let it out. He is not able to let it out because they are saying, how we will come, sir? Car cannot come inside. There's one small board for people to walk and cross and come in. No place to park the car also. You cannot put it inside the building because the entire construction is happening right outside the building. So what department said? They said your house is vacant or rather building is vacant. So income from house property, notional rent is taxable. Please offer it. Can you tell me if that it is taxable or not in this scenario? Can I use any excuse? Because I just told you this new section which says even if it is your stock in trade, based on ownership, you have to offer notional rent. I am telling you in this case, I was able to save the SSE. Even other cases similar to this, the SSE was able to be saved. How? The solution is this. You have something known as the casual vacancy allowance. The casual vacancy allowance is something we have all seen in income from house property. As Raj Talluji sir and many others have now said, it's not taxable. What is this casual vacancy allowance? And you can use this effectively for all your clients. Where, and I can, members, you can feel free to put your questions in the chat box or you want to answer in the chat box. I will keep it open and I will keep checking it and, answering the questions side by side. Instead of taking it all in the end, whatever relevant, you can put it up at this specific time itself and I will try to address it. So coming back to the question, casual vacancy allowance, how it works. Now section 23(1 has a very funny wording. It says where a property is let out and is vacant for whole or part of the year. What do they mean? Property is let out and vacant for part of the year means correct. 1 month I am letting it out, 11 months it's vacant. What do they mean? Property is let out and it is vacant for whole of the year. That means it cannot be let out. No? So here is the meaning of this section. They have said that it must be demonstrated by the assessee that he has attempted to let it out. So let us take, for example, the exact same case that I told you. Client has a house on the commercial property on the main heart of the city. So obviously income tax will say everyone will want to rent it out there. Why you are not rent it out? So therefore here you must once again demonstrate that you have tried to let it out and it has not come out. See, if somebody says, sir, see, I put on Facebook, sir, that I have a flat which is there for rent. Nobody wanted to take it, sir. So therefore, casual vacancy I want to claim. Is that allowable? So here the demonstration must be very clear. As someone rightly has raised in the questions they have asked me, how will you demonstrate, sir? Then won't everybody claim that casual vacancy allowance for all their properties? So here it will be checked on the facts and circumstances of each case. So how to demonstrate? I may have to show that I have put an ad in the paper, that I have got certain persons have reached out to me, that they are not willing to offer the right rate of rent, or nobody wants to take it out on rent. People have come and visited it. I have the photos of the property. Look at the entrance. There is no place to park the car. There is no place to walk. So much dust is there. If I am able to demonstrate all of these aspects, then 100% I can definitely claim the casual vacancy allowance. Now, one of the questions that have come up is notional rent applicable for this casual vacancy allowance? That is, can we claim casual vacancy allowance on notional rent also? Absolutely, you can claim on notional rent also. Please note, this is one of the first fundamental characteristics. The house should be lettable. The property should be lettable. I cannot have a house property that I've inherited from my father or grandfather. That entire house is dilapidated. There is no water connection. There is no electricity coming. Nobody is going to come and stay in that house. Therefore, there is some work that needs to be done for that house. So can I say that it is a lettable property? It is definitely not a lettable property. So I can claim casual vacancy allowance very much so on this property. It is my property, but it is not in a lettable scenario. So no sensible person will come and say, I will pay whatever is the market rate. I will take it on rent and I will take care of it. That is not going to happen. So therefore, this is the one way but you can very much, even for notional rent, you can use this casual vacancy allowance. So certain cases I have quoted here, you can use it. I will share the PPT with all the audience. They can circulate it. So these are certain cases. Prem Sudha Exports, our very famous former cricketer of India, Sachin Tendulkar, his own case was also there in the same issue where he has claimed casual vacancy allowance. So here somebody asked, how you demonstrate? They said intention to let out is also enough. If I am able to demonstrate that I intended to let out the property, that itself is enough for me to claim casual vacancy allowance. Of course, facts and circumstances will be seen in each case. Even in Sachin Tendulkar's case, the facts and circumstances were examined. DLF office developers, Poonam Sawhney and Vivek Jain. So all of these cases you can use in the favor of the assessee. Now, latest developments, certain cases which have come up just before we took up the session in 2022 and late in 2021 also, where this notional rent, the department said for assessment years, you know that till 31st of March, a lot of reopening was happening. I'm sure all of you received various notices for your clients where like a machine gun, without saying anything, our department was issuing reopening notices, scrutiny notices, orders being passed. No, they are all copy pasting the orders. We have seen the submissions of the assessee, but due to paucity of time, we are not able to admit it, and they have passed orders like that also. So in this scenario, some of the orders passed pertaining to the assessment year 14, 15, 15, 16, etc., where they said notional rent under this section 23.5, which has come out in the last year budget. So they said notional rent is applicable. When this went to the courts, various courts are now holding one by one, the decisions are coming, saying it is not a retrospective amendment, it is a prospective amendment. So therefore, it is only going forward, you cannot apply it before. So when the amendment came, assessment year 2018-19, from that you have to see 2 years you wait. Then after that, you please start taxing it. Do not tax it before, it is not fair. So this is how they have held it. So it is favorable to the assessee. If any of you have received reopening on this notional rent aspect, please use these decisions that you are seeing on the screen. Pegasus Properties and Kumar Properties, both are very, very good tribunal decisions where they have analyzed this detail in very, very detailed, saying it is not a retrospective, it is only prospective. So only after the amendment has come will this section be applicable. Now let us come to the next key issue, which is conversion of stock in trade into a capital asset. Now I just told you a scenario where we put in money, so many years, so much effort in developing this commercial property. Then finally, after all these efforts have happened, he is not able to, sell the properties. So here he is. Let us assume this person has decided to occupy the properties himself. He says, I am not able to sell it. I don't want to waste the properties. So till I find a tenant, I am going to occupy this and use it for my own business. So the entire first floor of the building, whoever is the developer, he himself decides to occupy the property, my dear friends. So now the question comes up, is this taxable at all? We have all studied in capital gains, conversion of a capital asset into a stock in trade. How does that work? Under the conversion of capital asset in stock in trade, the first thing that happens is the conversion happens. So I am holding gold as an investment. Suddenly I decide to start a jewelry business. So I convert my capital assets, whatever gold I am having, I make it into my stock for my business. So here, whether capital gains is applicable question came up. So they said, as per the Income Tax Act, on the date of conversion, you have to calculate what is the capital gains or capital loss as may be. But you don't have to pay tax till the asset is sold. So I will calculate the capital gains, but it need not be paid tax on till the actual sale of that particular jewelry or the particular gold that I'm talking about, which is a very reasonable section, because the logic is conversion does not mean it is income, because I have not collected any money. Nearly whatever I am holding, I continue to hold, just the nature has changed. Instead of being an investment, it has become a stock. So I don't have any earning. My financial position has not changed. I have not benefited by such conversion. So therefore, I cannot be taxed on this. So no notional taxation can be done. This was the idea and logic between how capital gains will be taxed in case a capital asset is converted into stock in trade. Now, recently, the finance minister has announced where there is conversion of stock in trade into capital asset, that also needs to be taxed.
There's no clarity. Nowhere in the Income Tax Act does it say how you should tax conversion of a stock into a capital asset. So with effect from assessment year 1920, they brought a change. And this is what the memorandum to the budget said. The memorandum always gives you the reason why an amendment is being brought. And in this memorandum, they have said, in order to bring symmetry to the provisions, that means it has to be like poetry, it has to rhyme. So they said, capital gains, capital asset to stock in trade we have, no? Similarly, we should have the stock in trade to capital asset also. So therefore, we are bringing a new amendment. Excellent, sir. What is the amendment? They have now said, on the date of conversion of the stock in trade to the capital asset, the fair market value of the inventory on such date of conversion will be treated as income from PGBP on the date of conversion, not on the date of sale. Please note, this is a very, very important point, because under capital asset to stock in trade, the capital gains may be calculated, but the payment of tax arises only on the sale of that stock. It does not happen on the date of conversion. However, here under this provision, they have said conversion of the stock in trade to the capital asset will be subject to tax on the date of conversion. As the assessee benefited in any form by simply converting his stock into capital asset? He has not benefited. Absolutely right. Everyone who's answering to me in chat, absolutely no benefit has accrued to the assessee by such conversion. By mere conversion, nothing has happened. He has not got any income. He has not got any revenue. He has not got any benefit. Mere change in the nature, purely for the books. Asset change in nature has not happened. For the purposes of accounting, there has been a change in the nature of that particular asset. From stock, it has now become a capital asset. To levy a notional tax, is highly unfair. So now a question you may have, and as one person has asked, is this applicable only to real estate transactions? It is applicable also to real estate transactions. It is applicable to all stocks. It is applicable to all your stocks, whatever nature of the asset. It is also applicable to real estate. And now the important question, when it comes to real estate, it is applicable at the stamp duty value or the fair market value. So therefore, you have purchased an asset, or your grandparents have purchased lots of land. Years ago, they have purchased lots of land. What at that time was a farm area, they purchased so much of it. It is inherited by your father, subsequently inherited by you, almost 60, 70 years later. For your luck, 70 years later, that area has become a major important area in the city. So what you are doing, you don't have anything else to do, so you decide, I'm going to start a real estate business. Careful, sir, because your grandparents purchased all that property at 1,000 rupees, 10,000 rupees, 5,000 rupees, huge acres of land. Today, the fair market value of each of those lands runs into several crores. You have decided to start a business. You are converting a capital asset into stock in trade. So let us assume your business does not take off. So what you do? Similarly, whatever lands you have purchased today, you are not able to sell it, you are not able to do anything. You decide to convert your stock in trade back into a capital asset. Similar scenario. Imagine all those lands you had purchased years ago, 1,000 rupees, 10,000 rupees. You don't want to do business. It's your father's business you have inherited. So you are converting it into a capital asset from stock in trade. The entire fair market value becomes taxable to you on the date of conversion. From 10,000 rupees to several crores, no benefit you have received. You have merely converted it. But here you are having to pay the tax at the fair market value. Cost of acquisition and all, nothing it will be. Even 2001, if you take the fair market value or guideline value, it will not be worth what is the value of those lands today. So this section is providing to be major havoc. It is providing to be a major havoc because till this amendment came, there was no clarity on conversion of stock in trade into capital asset. So therefore, there was no tax consequences. I can convert whenever I want. Whenever I decide stock in trade, I want to convert into capital assets, I could do it. There is an important point here. It is not that every assessee is a Harish Chandra. There was some abusing of these tax provisions which was done, especially by persons who are trading in shares. We'll take a scenario. I'm an assessee who has Reliance shares. So this Reliance shares, I purchased it at, let's say, 300 rupees. Today it is trading at 2,400 or 2,500. Now what I will do, I will say, sir, I was in the, definitely I was in the business of trading shares. You are correct. I don't disagree. But sir, this share, I converted it. 10 years back itself, I converted it from stock in trade into a capital asset, sir. So therefore, it is in my personal books. So it is my capital asset. I want to claim exemption, long-term capital gains. I purchased at 300, now it is 2,400, 2,000 rupees gain I have. Entire thing exempt under 1038, or even now under 112A, simply 10% tax I need to pay. Very, very beneficial provision. But suppose it's the inverse scenario. I have purchased it at 2,400 rupees. Now the price is 300 rupees. That means I will say, sir, it is my stock only, sir. I have not made it capital asset, sir. I want to take it as stock. It is a business loss. I have sold it 2,000 rupees loss I have. I will adjust it against my other gains and against other heads of income also. That is the nature of the business loss, they will say, and they will claim the benefit and go away. So because of this, this amendment was brought. But unfortunately, this amendment has had a huge bearing on real estate companies. There are so many developers, people who are becoming next generation, second or third generation, they are being hugely affected by this provision, where they are having to pay tax purely on the conversion into a capital asset, or even if they want to use for their own purpose. They have purchased a land, they have built on it, they are not able to let it out, they want to use it for their offices, then be ready, you have to pay the fair market value on such conversion. Maybe till you sell it, you want to use, but still it is being used for your business, then therefore it is very much possible that it is your capital asset. So therefore they will tax you in this scenario. Now the next important question that many people ask. So okay, now you want to tax under this new provision of 28(6)(a). You are going to tax me at the fair market value on the date of such conversion. So therefore the question came up. So let us take a scenario and you can answer me this. I purchased a property as a stock. It was my stock. I purchased it in 2011. In 2021, I have converted it from a stock into a capital asset. On 2022, I have decided to sell this land. I have converted it in 2021 into capital asset. On 2022, I have sold it. Can you tell me, will this be long-term capital gains or short-term capital gains in this land? Because I purchased it in 2011. I have held it for 11 years, but I have converted it in 2021. I am selling it in 2022. Will it be long-term or will it be short-term capital gains in this scenario? Because you all know, long-term means you have to hold the particular capital asset for 2 years. In this year, in this case, there is a confusion. I have held it for 11 years because I purchased it in 2011. But I have converted it from a stock in trade. That time when I purchased it, it was stock in trade. Now it's a capital asset only for 1 year. So therefore, will it be long-term or will it be short-term in nature? So I'm getting many answers. Many people are saying it will be long-term. Some people are saying it will be short-term. So therefore, I can see that we are getting a lot of mixed answers over here. So Ashwini again says it is going to be short-term only. So here, Ashwini and the others who have said it is short-term are absolutely right. Because when it comes to the holding period under capital gains, they have specifically mentioned it should be held as a capital asset, not simply holding. I could not have held a stock. So even if I got it in 1950, they will not consider it if it was held as stock at that time. So therefore, it should be held in the nature of a capital asset for at least 2 years for it to be long-term. Now, answer some more question that someone had. Somebody has asked saying, sir, will we bringing wealth tax? Will it be better than charging assessees based on notional or deeming provisions? Sir, to answer your question, that is the reason this amendment has come. That is the reason wealth tax is removed. It is not because it helps administration or helps assessee. It helps revenue authorities. One of the rationale they said when wealth tax was removed, they brought a super surcharge, where they brought a surcharge on persons who are earning income more than 3 crore rupees. Now for more than 5 crore also they have brought huge amount as a super surcharge tax. They said this, we are compensating wealth tax, we are removing wealth tax, and we are not taxing people in the manner of surcharge. Everyone thought, oh, excellent, excellent. But it is unfair because surcharge is based on income. Whereas wealth is not based on income. It is based on what are the positional assets I have. There are some clients who are there or some associates who are there who have inherited huge number of assets, n number of lands, building, cars, etc. They have inherited from their family. They are essentially unemployed only because they don't have to work. They are getting rental income regularly, some simply for the sake of working or simply for the sake of doing business. Certain people are doing business, but majority for them is coming from the inherited assets that they've had. These persons, if you see the return of income, their income will be less than 5 lakhs, sometimes less than 10 lakhs, sometimes it will be zero income also. But if you see their wealth, it will be running into hundreds and thousands of crores. So therefore, wealth tax would have been able to capture them and collect revenue from them. Whereas now they are penalizing the persons who are working hard, first generation entrepreneurs, first generation salaried persons. They are being taxed at the rate of almost 43%. 43% tax. Almost half of their earnings is fully gone to tax to compensate for wealth tax. So your question to answer when you are asking, will wealth tax be better? 100% wealth tax will be better. But there is deliberately the reason why they are bringing notional and deeming provisions to compensate wealth tax, they are saying, but actually they are collecting more than wealth tax, sir. That is the reality. That is very much the reality. So yes, wealth tax is more beneficial for assessee, but this is more beneficial for the department. So therefore, once again, what are certain tax planning opportunities which are there with this provision? So these are two critical ways that you can plan your taxes, my dear friends. The first thing, suppose you have any capital loss that is about to expire. You all know short-term and long-term capital gains or capital loss. You can carry it forward for up to 8 years. You can carry it forward up to 8 years. So suppose this 8 years is about to expire. Then you can convert your capital asset into stock in trade and you can use that. Or suppose you have any inventory cost that is higher than your guideline value, where your inventory cost is higher than your guideline value, then the same can be used to create a business loss. So you can convert it. You can convert it into your stock in trade or capital asset as may be and use it as an opportunity to set off against your business loss. Now the next one, before that I think one question has come where, sir, they will hold several agricultural lands and show the income and claim exemption under income tax, avoiding wealth tax at the end. So they will hold several, show it as income and avoid. So Shyam Sundar sir, in fact, later in this presentation, I'll be touching upon what is the taxation of agricultural land. So definitely agricultural land looked like a very, very attractive way to avoid taxes, even agricultural income. But now the department deliberately, if you have noticed the changes in ITR form, when I took a session a few days back, this was one aspect where I touched upon it, where now ITR 1 can be filed only if you have agricultural income up to 5,000. If you have more than 5,000 rupees agricultural income, you can no longer file ITR 1. You are supposed to file ITR 2 or ITR 3 as may be applicable. Now, the moment you move to ITR 2 or ITR 3, the requirements for you to disclose details has gone up. Naturally, that means you have to disclose details, more details about your agricultural income. When you do that now, straight away the case is picked up for scrutiny. So if you have, let's assume, 10 lakh rupees as agricultural income, you must be able to demonstrate, sir, what is the nature of this income, what crops are grown. You have to take photos of the land, whether really agricultural activity is happening there. Then you have to examine other aspects as well. Tahsildar has to give a certificate, Adangal Chitta. You cannot have a punctured agricultural land where nothing is able to grow and simply say, see, I have grown coconuts, sir. So therefore, I am getting agricultural income of 10 lakhs. Those days are gone, Shyam Sundar sir. Because now we are in the era of all computerization. Department is very aggressive on these aspects. So you cannot simply claim that. So wealth tax is not, they cannot avoid wealth tax simply by saying this. In fact, they will get caught in the ambit. So in my view, if they genuinely want to help assessees, having wealth tax may be better. But now, in fact, wealth tax has proven to be not very, very exciting for them because they can collect more revenue through notional and deeming provisions. So what is the guideline value here? Here the guideline value, they say fair market value, or what they say under Rule 11 UAP, they say what is the guideline value as on that date. Suppose let us assume guideline value is not there. Because I understand in Andhra, I was told when I was handling a case, in some cases, guideline value did not come up to the year 2007 or 2008 in some places. So let us assume in your assessee case, that property we're dealing with was purchased in 2004 or the conversion happened in 2004. Then how will you deal with the guideline value there? So there you have to take the fair market value, not the guideline value, because there is no guideline value. But wherever guideline value is there, you can very much take that as the fair market value. If the department opposes that, if the guideline value is too low, the department opposes that, then definitely that a department has to prove what is the fair market value. Suppose FMV is not available. What if FMV is not available? Somebody has asked. So then you have to demonstrate the value in some way. So fair market value definitely will be available in some form. If your property is not there, so let us assume it's an apartment. There are 10 apartments there. I am converting one apartment or I am selling one apartment. You have to determine the fair market value. How will you determine it? 9 other apartments is there. Definitely somebody would have sold a flat either this year or in the last 4 to 5 years. If not your apartment, at least next door there will be some apartment. Even if next door there is not any apartment, in the next street there will be some apartment. If it's not there in the next street, in the next area at least it will be there. So that is how they will expand it. So if there is no guideline value, then fair market value has to be determined by the facts and circumstances of each case. So whatever is the nearest property that resembles your property, they can determine the fair market value, or the important point, a reference can be made to a valuation officer, which is what happens in majority of the cases. A valuation officer will come, someone who's an expert in that field. He will come and he will determine what is the fair market value, whether it is reasonable or not, and based on that it will be calculated. I hope that clears your question, sir. Now let us come to the next issue when it comes to the developer side. It is what we call project completion versus percentage of completion method. This is an extremely big issue because now currently majority of us and majority of developers also prefer what we call the project completion method. What is this project completion method? In project completion method, the income and expenditure of a particular project is not recognized till it is completed, which means construction is going on for 6 years. Nothing will be there in the P&L balance sheet, assuming there's only one project. It is not completed for 6 years. No expenses will be there. No sales also will be there. Finally, on the date of completion, suddenly the entire revenue and the entire expenses will be accounted in a single year. So this is how it will happen under project completion method. But what is percentage of completion method? Percentage of completion method, every year or on every milestone, there will be certain proportion which will be recognized. There is a way you calculate the same. So therefore, these two accepted methods were there. So you could choose whichever is beneficial to you. Even the biggest builders, I'm not talking small persons, small builders who are there, small practicing CAs are advising this. No. Some of the biggest leading constructors, developers across the country, even listed companies, some of them used to take the project completion method. Some others used to take the percentage of completion. So this is how it was done for all many years together. Now, department naturally, they always prefer the percentage of completion because revenue is continuously getting recognized. Some tax they'll be getting on a regular basis instead of deferring it for multiple years together, and they have to check so many expenses across so many years to do that. So therefore, they all prefer percentage of completion. Assessee and generally the auditors also, in most cases, they prefer what they call the project completion method. Now, interestingly over here, the institute came out with a guidance note. The guidance note came out sometime in 2011, where the institute recommended that we must follow the percentage of completion method only, don't follow project completion method. They explained how it should be calculated, etc. Now, here it was very appreciable. But then there was no pressure on the assessee to follow this. Subsequently, the ICDS came out. Now, this ICDS also, there were 2 ICDS where the department came up with it and they said it's applicable. First, they said ICDS 3 is applicable. Construction contract is applicable. So immediately we all went and objected. The construction contract is not applicable. They said, why not? I said, if you read ICDS 3, you can see that one clause says, what is a construction contract? a contract specifically negotiated, where the terms of design and technology or ultimate purpose and function of how it is used is determined by the buyer. Can you tell me, when you are buying a flat, will you go and approve the blueprint saying this is how you should construct it, this is how it should be done, this is how I want it to be designed? Or will it be done by the developer himself? It will most likely be done by the developer himself. In 90% of the cases, it will be done by him. So no developer goes to their person who is buying the property and tells them it should be as per your design or technology. It may be done for factories and certain special cases, but in majority of normal constructors, professional, whether be it for the purposes of commercial or be it for the purpose of residential, in majority of the cases, it is done by the developer's design, not by the buyer's design. So therefore, automatically, ICDS 3 got relegated. They said ICDS 3 is not applicable because of this. Then they said, okay, ICDS 3 not applicable. What about ICDS 4? ICDS 4, you have to do percentage of completion. Revenue recognition deals with it. But under revenue recognition, ICDS 4 also, it deals with sale of goods, rendering of services, use of other persons yielding royalty, etc. Various courts have held that real estate cannot be grouped with sale of goods or services. So therefore, straight away, ICDS 4 also not. Now, department, they thought through ICDS, they have been mandating percentage of completion. So ICDS also gone. Various cases are there that I've shown you on the screen. You can use this. I will share the PPT. For many people, they repeatedly asking in the chat box, can you share the PPT? Don't worry, sir. I will give the entire PPT. All these decisions you can use. But ultimately, in order to tackle this, they brought about a provision called 43CB. This 43CB finally said that profits arising from a construction contract or a contract for providing services also under these sort of transactions shall be deemed on percentage of completion method only. What the government should have done or what the department should have done, they should have brought this provision and left it at that. But what they said, we are bringing it in assessment year 18-19, but so much efforts they have taken, no, so many years, they tried ICDS, they took so many reopening cases, they tried ICDS 3, ICDS 4, so that did not work out. So what they did when they brought this amendment under 43CB, they said it's not applicable from assessment year 18-19, it is applicable retrospectively. What they said, retrospectively it is applicable. So all the years before also, you should have followed percentage of completion only. Sir, I am filing my returns in 2013. I am not some philosopher or great person who can see the future, where I have to do percentage of completion in 2013, anticipating in 2018, our department will bring a retrospective amendment saying in 2013, no, 5 years back, you should have done percentage of completion. How I would have done? It is not possible. It's not practically possible for any assessee to retrospectively have done something like this, where you are saying percentage of completion applicable retrospectively. It's not practically possible. So therefore, it is a very, very silly amendment that said retrospectively. So naturally, what our friends at department started doing is they started reopening the cases, saying it retrospectively applicable. Why in 2013 you didn't follow a percentage of completion? Sir, I did not know at that time. No, you should have known in 2018 they have brought a retrospective amendment. Why you didn't do in 2013? It's very, very silly to even discuss it. But this is a fact. This is what is happening. So many reopening cases that we are dealing with at the tribunal all deal with the same issue. And luckily, our friends at the tribunal, the judges there, the members there, they have been very, very kind enough to hold the cases in our favor. So these are certain of the case laws that you can use. Prestige Estates, Ashoka High Tech Builders, Trident Estate. As I told you, this is a very new law. All the issues that I am telling you, they have come out in the last 3-4 years, the amendments. But the fact remains, these have not been taken up for scrutiny as yet. Very, very few cases have been taken up for scrutiny. That many judgments are not there. So I have tabulated all the favorable judgments here for you. So you can note these down. I will share the PPT so you can save these judgments. These are very, very important because various reopening cases, especially notices that have been issued now in this 31st March time, all these issues have been taken up. So therefore, ensure that you quote this before assessment year 18-19. It is impossible for them to have mandated percentage of completion. Project completion is also very much an accepted method of accounting. It can very much be claimed. Now, to answer, somebody had asked how you measure this percentage of completion. This is the ICAI guidelines that I put over here. But to make it easy for someone, there are normally multiple methods are there, but the most common method is what we call the expenditure approach, where you take what is the total expenditure of the project is there in your base, and whatever expenditure you have incurred up to date, that is your numerator. Denominator is the total expected expenditure of the project into 100. So that is the percentage of completion. Very, very straightforward and simple method of calculating. So that would be the ideal way that you calculate your percentage of completion in a simple manner. Because you have other methods also, technical estimation, and where you get someone to come and measure it, see what is the technical position of it, whether any very completion has happened, worthwhile, etc., whether 25% has been completed, and all of these estimation will be done. This is the ICAI guidance note. But my view, better you go for expenditure based. It is very, very easy to measure, and it is accepted by the department also. Now let us come to probably the most controversial topic when it comes to real estate, which is a taxation of joint development agreement or a specified agreement, what we call. So this joint development agreement is Madhuri ma'am gave the opening address. She said capital real estate transaction is very difficult to do in 3 hours. So we have spread it over 3 days. But I can tell you this joint development agreement, you can spread it over 30 days also, still people will have doubts and issues. It is such a complex issue where various angles are there to be examined. Now for those who are unfamiliar, what is a joint development agreement or a specified agreement, so to speak? Now let us assume that I have a land in a big, great area, most busy area in the city, whatever city you want to think of. I have a wonderful land in the heart of the city, but I don't have money to construct. It's a land I've inherited from my family, and I don't have the money to do any building on that. So I just have the land. Somebody told me it's a good land, so I'm just keeping it without selling it. Suddenly one day, one friend approaches me. This friend says, Abhishek, you have a land in a very wonderful area. I'm a builder, so I have the resources to construct. I don't have the money to buy your land, but I can construct on your land. Why don't we understand? I said, okay, what is the understanding? He says, you execute a power of attorney in the favor of the builder, saying that I can do whatever I want on the land. I can build properties, I can build several floors, I can do whatever construction, and I can dispose of these properties also when it is constructed. So I say, in return, what do I get? So in return, in a building where I'm building 20 flats, Abhishek gets 5 flats. So 15 flats I will sell, 5 flats I will give you. I will sell it on your behalf. Those 5 flats I will sell it on your behalf. So I say, wonderful, because not only am I selling the flats, I'm getting wonderful completed amenities. There is parking, there is a building, pathway is there. Earlier only bushes was there, nothing was there. Now I have a wonderful area over there. I can do whatever I want with it. I can sell it or I can use it for my own self. So this is what is known as a joint development agreement. So when it came to this joint development agreement, naturally, taxation became a big issue. When will it be subject to tax? Will it be subject to tax at the date I'm executing the power of attorney? The day that builder takes the power of attorney from me, does the transfer happen there? Or does it happen when he starts the construction? Or does it happen when the property is sold? So 3 scenarios. When does it happen? A, B, or C? Now, naturally, income tax department will say it happens at the time of A. Whenever you are executing the power of attorney, that is when you have to pay the tax. Now, some people have answered here saying that it must happen at the time of C, at the time of sale. So naturally, as an assessee, we will say that capital gains is taxable only at the time of sale. Department said, no, it is not practical. I said, why not? They said, you are saying it is not practical when power of attorney is entered to, because you have not got any money. In fact, whatever land I have given it to somebody. So it cannot be taxed at the time of executing power of attorney. What about time of construction? Still no benefit has accrued to me. Whatever land is there, I have given it to you. You have started construction on it. No benefit I am getting out of this. So therefore, once again, I don't have the money to pay the tax. It is still unfair. Then when we say it is at the time of sale, department said, what if you never sell? You are saying at the time of sale. What if at the end of 4 years, you decide I am not going to sell it? Then you have got a big benefit from it, but you have not paid any tax on it, and you have parted with 15 flats and some common area also you have parted. So therefore, you have also got a benefit and you are not saying any tax is coming on it. So therefore, ultimately, it was being taxed at the time of issue of the completion certificate. Issue of completion certificate is when the taxability comes up. So you may ask once again, sir, how? At point A, you said power of attorney, no benefit I've got. At the time of construction, no benefit I've got. Now, once again, time of sale, it's not possible because you are saying, what if I never sell? How at the time of completion also I have got any benefit? I have not got any money here. You have got a benefit. You have got a completed flat. You have got common area, amenities, etc. You have got a developed land now. So therefore, you have got a benefit. Whether you want to sell or not is up to you. But you have derived a benefit from the transaction. So on the date the completion certificate is issued by the prescribed authority, that date the capital gains becomes taxable in the hands of the person who has entered into the JDA with the builder. So therefore, at the time of completion certificate, it is taxable. So we got clarity over here. This is what we call a plain vanilla joint development agreement here. But here, somebody has asked, money comes only at the time of sale, sir. Payment of tax can be done only when money comes. Correct, sir. But what if you never sell it, Suresh, sir? What if I decide it is my property, I only want to keep it, I will never sell it? Then the department does not get capital gains at all. The 20 flats are being sold without anybody paying capital gains on it. So therefore, in order to avoid that, completion certificate concept was issued, and I completely agree that this is the right time for them to do it. So therefore, I have no objection with this. So that happens. That is a taxation when it comes to the normal tendency of joint development agreements. This is the most common style that you will see. But over the last few years, there have been some developments. Now, let me ask you here. Now, outright sale of land is very obvious. I have a land, I am selling it to someone. It is a sale, capital gains straight away now. Share of area, share of flats. This is the concept we just discussed, and we have understood capital gains is taxable at the time of completion certificate being issued. Now, what about grant of development rights with a revenue sharing agreement or a profit sharing agreement? Now, here is a very, very interesting thing. So, I am someone, I have the land. Builder is my friend. He comes to me, we enter into understanding. What I am telling him, at the end of each year, because he is getting, no, every time somebody books a flat, he will have milestones. At the end of so and so milestone, you have to give me another payment. Next installment has to come on so and so date. All of these terms he has with whoever he is selling it to. So therefore, what I am saying, I don't want to wait till the end, but I know you cannot pay me at the start. So whenever you are getting money, every time someone makes a booking, every time someone gives you an installment, at each of those moments, you have to give me 10% of whatever money you earned. So at the end, once the final payment is received, once you pay the final 10%, that is when it is entirely complete. Now the question comes up, this is what we call revenue share. Next is what we call profit share. At the end of each year, you have to give me whatever certain percentage of your profits. So much money you have got, so much expenses, percentage of completion method you please follow, you calculate the profit, and 25 to 50% of the profit you have to give me at the end of the year. So at each end of the year, you have to share your profits with me. Now the question comes up here, when does capital gains become applicable here? Does it happen at the time he gets the money? Does it happen at the end of the year? Or does it happen at the final payment of the installment? Whenever the last installment is given, I will get 10% or I will get the final profit once all the payments are made for the entire property. Is it when that happens that the capital gains is applicable? Or is capital gains not applicable at all? Here, I am getting again multiple answers. Very interesting. Some people are saying capital gains only at the time of completion certificate here. Taxable as and when received. Some people have said. Anybody has any other different answers? Anybody saying capital gains itself is not applicable? So here, there is a very, very interesting development because this is a very new type of JDA. Only in the last few years, people have started following this JDA. The reason being, very often, what happens is builders start the construction. Then for whatever inflation happens, some issue happens, some big regulatory issue happens, they are not able to complete. So what do? They will just abandon the project and they'll run away. that poor person who has entered into power of attorney, he is stuck with the land which he cannot sell. He is stuck with the land which has some halfway construction done. He is stuck without knowing where the person has run away, the developer. He is not able to take action against him. So he is not able to reclaim his land. He is not able to sell his land also. So he is in a very, very pitiable scenario. So in order to avoid this, these sort of new types of JDA agreements started developing, where they said, I want a revenue share regularly. I want a profit share. So whatever benefit you are getting, it will accrue to me. So these sort of developments came up. Now, when these developments have come, the income tax department have held that this is in the nature of a business, even though it is a capital asset. Even though it is a capital asset, the nature of this venture between me and the developer is not in the form of an investment transaction. It is almost like a business, because I'm sharing profits, I'm sharing revenue. It is like I'm a partner in his business. So I cannot treat it as capital gains, even though I'm not doing anything. I have just given the land. He is only doing everything. End of the day, 1% only I'm getting. Despite that, it has been held that it will be in nature of a business. And if they are in the mood, they will treat it to be AOP also in these sort of scenarios. So be very, very careful here, because it will be treated very much like a business transaction. So they will treat it as income. PGBP will be treated, even though you may be an investor. As now Shyam Sundar sir has asked, so is it the case like capital gains will be arise at the time of agreement, and the owner of the land pays at the time of agreement for giving development rights, and after getting completion of the flats, owner claims the amount he paid as a cost of acquisition? Okay, this is a good question, because Shyam is asking, at the time of entering power of attorney, I am transferring a right. So therefore, why is capital gains not applicable at that point of time? Now, without getting too technical, there are multiple common law decisions, not relating to income tax, but common law decisions where they have held a land does not mean it is just the mere physical land, but it is also a right to use the land. It is whatever future benefits are accruing from the land. So therefore, all of this forms part of the land. So therefore, when it comes to a right, this right is effectively land only. It is not a separate right only. It is also a land. There are certain conflicting issues when it comes to this, but majority of this has been held to the favor of assessee, saying it is not a separate right. This is a right to use the land, which means it's effectively the land itself. And ultimately also, in the examples that I gave you, the land is also being sold. The land is also being sold. So it is not a development right that is being transferred. It is essentially the land only. Now, Suresh Kumar Jain sir has asked, is it taxable as and when? It is taxable as and when money comes to the kitty. You are absolutely right. It is taxable as and when money comes. So in that year, in the other last two scenarios I told you, revenue sharing, profit sharing arrangement, in both these scenarios, it will very much be business income taxable in that year whenever you are getting the money. It will be taxed either on cash basis or accrual, however you want to follow. But ultimately, it will be taxed in that respective year. Now, Kasturi sir has asked, a piece of land is developed by gifting 40% land to local authority for laying roads and drainages, and remaining 60% for sale. How will this gone? So I think, in fact, this is a very unique situation in Andhra Pradesh. Am I right or am I wrong? Because I have seen whenever I address in capital gain session in Andhra Pradesh, I get this question very often. So in fact, I did some reading on this, where it's a very, very unique scenario. Now only it is coming up for cases actually, where they are saying a development right. We will take a scenario. I have a land. Suddenly government says they want one portion of the land in the front of it, and they allow me to construct some other asset in place. So they say, okay, you construct the extra floor. So you construct an extra floor and we will take this land. So it's a development right we will have over this. We will maintain it. Let's say we'll have public toilet, or we'll have a nice park over there in this land that you're given, etc. So question came up, is it capital gains that you're getting? Some various decisions have interestingly held, saying this is not in the nature of the same asset. One asset has gone to the government, the other asset, some other benefit comes. So therefore, it is not capital gains at all. It is completely exempt from taxation. It is completely exempt from taxation in this kind of scenario. So the 40% land which has gone, whatever benefit you have got from it is not even taxable at all under no portion of the law. It is like a capital receipt. So therefore, there is no tax on it. Some courts have held. Very, very interesting decision, because I personally don't necessarily agree with it. I think any benefit which you are getting in whatever form is effectively sale consideration. But many courts have held that it is not even a consideration at all. It is not a capital asset. It is completely different. So therefore, no tax needs to be paid on it. I don't think I put those decisions here, but maybe when I'm sending it to the branch management team, I will send these decisions also to them. Now, one more very, very interesting concept which has developed very, very recently is what is known as Development Management Agreement. Now, this is mostly a GST issue, and I'm sure whoever is speaking on GST will take this up tomorrow. See, normally we have a JDA. We enter into a power of attorney with the developer. Developer does the marketing, he does the entire thing. He has the power to even dispose and alienate the properties which he has constructed. So this is what you call a JDA. Now you have a DMA, Development Management Agreement, where now essentially the developer becomes a supervisor. He acts like a supervisor. The nature of agreement is that he is a supervisor, and the person who is selling the land, or rather entering into the power of attorney, he is acting as a developer himself. In reality, it is the developer only is doing everything still. Nothing has changed. The actual substance over form, if you see, the developer only does everything. But under DMA, it is as if the person who is owning the land is only doing everything. That developer is an advisor, like consultancy services, like how he comes to auditor for advice. Like that, the owner is going to the developer saying, "Sir, you please advise me," and he is taking some services from him. This was done largely to save some GST. Maybe the specifics will be dealt with tomorrow, but to avoid some GST tax, this concept was developed. But unfortunately, as you may have heard in yesterday's session, the RERA implications are larger, because as a project owner, I don't know anything as far as development and management, etc. is concerned. Everything that developer is only doing. But under RERA, all the responsibility will fall on me. It will not fall on the developer. So even though this may be attractive from a tax point of view, you may be saving 4%, 5%, essentially you can make a profit on this sort of venture. But ultimately, the risks involved are greater, because every person who is buying that property, every person who buys it will take action against you, not against the developer. So there are larger ramifications here. So when you advise someone to do the Development Management Association agreement, it may be important that you take this also into consideration, that it's a great risk from the angle of the owner of the property, because he does not have experience in managing these aspects. Even something as similar as drafting the agreements for the people, it will technically go in the name of the owner only. It will not go in the name of the DMA. So they cannot take any action against them. So this is something we have to be very, very careful about. So next question someone has asked, what shall be the cost of revenue proportionate to the value of land sold? Yes, very much so. It was almost like whatever he is taking in terms of the profit and loss account built by the developer, essentially the same thing you will be applying when it comes to taking your profit over here. So you will have a certain, it is almost like a joint venture. That is why I told you, in these circumstances, they will almost treat it like a AOP. They will treat the transaction as if it is a separate entity like AOP. They have done it also in some scenarios. But as I told you, it's a very, very early stages, even when the department is assessing these sort of cases. So there is a major lack of clarity as to how they are going to tax this. But definitely that is much the case, where I'm getting the income or revenue from that. Straight away, that will be my income in my P&L. But what are my expenses? What are the nature of the expenses? Can I have other expenses also? Will I amortize the cost of the land over the period of getting this revenue? So all of these are important practical questions which are there when it comes to the taxation of the same. And if I do it, will the department be happy to accept, yes, amortization is correct. That's how you should do it. So these are certain practical issues which are there when it comes to these sort of things. So is project completion method allowed in income tax for revenue recognition, or percentage of completion is compulsory? Anil sir, as I told you little earlier in the presentation, till assessment year 18-19, project completion method is perfectly acceptable, no problem at all. But from assessment year 18-19, percentage of completion has become mandatory. 43 CB has been introduced. There may be scenarios, the reason you are asking this question may be because you may have got some notices for the earlier years events of 17, 18 or 16, 17, income tax will say that project percentage of completion you have not followed. So they will be wanting to make an addition for you. So in this scenario, do not get frazzled, because I have given you a list of decisions where you can say that project completion was allowed even at that time. Even though 43 CB, this amendment saying percentage of completion should be followed is a retrospective amendment. Despite that, various courts are held in the favor of the assessee, saying that you cannot retrospectively put a decision. That 2013, I cannot foresee, oh, from 2018, they want percentage completion to be done retrospectively. I cannot tell. So therefore, only prospectively applicable. But if you are asking for the current year, then only one option is there. You must follow only percentage of completion method, sir. You don't have any other option over here. Now that is as far as the developer is concerned. So now let us quickly take certain aspects when it comes as an investor. Now taxation of a capital gains. Now you know, here one very, very important development is that definition of a capital asset. Capital asset definition is what we call a negative definition. Capital asset means property of all kind, but does not include the following. It does not include stock in trade. It does not include personal assets, clothes, furniture, utensils. But exception is made for jewelry, work of arts, etc. It does not include rural agriculture. Now let me ask you a question here. Is crypto assets, you know, latest budget major amendment has come, blockchain, whatever your cryptocurrency, Bitcoin, NFT, etc. Is that a capital asset or is that not a capital asset? Can I get a simple yes or no? Yes, it is a capital asset. No, it is not a capital asset. Because what I can tell you is that this definition has not changed. Whatever definition you are seeing on the screen over here has not changed in the latest budget. They have brought new provisions to tax cryptocurrency, but they have not changed this definition of capital asset that you are seeing on the screen. So therefore, there is a lot of conflicting answers. Some have said no, many people have said yes. My good friend Satish has said yes. So here, I'm going to agree with Satish, Suresh, and all the others who have said yes to me. Because here, the definition of capital asset has not changed. Capital asset means property of all kind, but does not include the following. So it does not include stock in trade. It does not include personal assets. It does not include rural agricultural. It does not include cryptocurrency. Digital assets, virtual digital assets, that's the word they have used in this budget. So they have not used that. So technically speaking, even though Sastri sir has said it's an intangible asset, in my view, it is a tangible asset, but it is still intangible also. It's a property of all kind. So very much it should be capital asset only. But ultimately, it does not matter. Why I am telling you this is because cryptocurrency has its own way of taxation. It does not matter whether you want to show under capital asset, capital gains. It does not matter whether you want to show under income from other sources. You can show in salary also for all you care. It does not matter. The reason being that if you deal in crypto, the way it is taxed is very, very clear. They have specified how carry forward should be done, how set off should be done, how taxation should be done. Everything is specified under cryptocurrency. So it does not matter what head of income you want to show, it does not matter, because special rates of taxes are applicable. Laws cannot be set off. Various other issues, practical issues, whatever deals with taxing and income has been clearly defined for cryptocurrency. So somebody has asked whether it will be treated as stock in trade. So if you are a chartered accountant and you have purchased cryptocurrency, if it is treated as business, then can the institute not take action against you, because you are not supposed to do any other business if you are holding a COP. By simply holding one cryptocurrency, somebody told you it's a good asset to purchase, you have purchased. Does that mean institute can take action saying you are in violation of COP? You are doing business also. So that would be unfair in my view. So in my view, if you be very technical, cryptocurrency is definitely a capital asset. But how you want to show it does not matter in the end, because the tax has been very clearly, defined how it should be taxed. So it is simply educational matter. We can debate it is a capital asset, it's other source. Ultimately, what tax has been prescribed. So how does it matter whether it is a capital asset or whether it is income from other sources? So in my view, don't waste your time which head of income if you are having any clients with crypto taxation, because this return filing season, many people will be having this issue. So that is why I thought I will deal with it. You can put it as capital gains, you can put it as income from other sources, it does not matter. Now, period of holding, I don't want to spend too much time here, but just quickly to brief people over here, you know that if it's a listed equity share, equity oriented mutual fund, 12 months is the holding period. Immovable property is 24 months. Any other property, it is 3 years or 36 months as they say it. Now, let me ask you a question over here. I have a property. I have inherited it from my father. My father purchased this property in 1997. I have inherited this property in 2021. I have sold this property in 2022. Almost the exact same scenario we had discussed for conversion of stock in trade into capital asset. Property purchased by my father in 2007 or 2011. It is inherited by me 10 years later, 2021. Next day, the moment I inherit it, I decide, okay, I am going to sell this. Can you tell me here whether it is long term or short term over here? Because I have inherited it within less than a day, I have held it. I have immediately sold the asset. Is it long term or is it short term over here? As rightly answered by majority of the persons, it is long term in nature, because there are certain cases where they have made this exception, where the inheritance, gift, will, partition or succession, in all of these cases, the period of holding of the previous owner also will be taken into consideration. But now let me ask you another follow-up question. My father purchased the land for 1,000 rupees, or he purchased it for 1 lakh rupees or 10 lakh rupees, whatever amount you want, you attribute it. How much am I paying when I inherit it? I am paying a big zero because it is coming to me for free. So when I sell this property, what is my cost of acquisition here? Is my cost of acquisition what my father purchased? Is my cost of acquisition nil because I have not paid anything? Or is my cost of acquisition fair market value or something? Now, suppose I have purchased it in 1997. Then my cost of acquisition will be whatever my father paid for that property, or fair market value as on 1/4/2001, whichever is higher. But what if my father purchased this in 2007? Then what will be my cost of acquisition in this case? Will it be fair market value when I am holding the property, or will it be whatever price he had paid for, or will it be zero? So in this case, it is very clear. Almost everyone have correctly answered, saying it is the cost to the previous owner. So therefore, whatever my father paid, even though I inherited for zero, even though the next day I am selling the property, it does not matter. The cost of the asset to the previous owner is what will be considered in such a scenario. So I can, even though I have not paid anything, even though I have held it even for just 1 day, whatever is the cost to the previous owner, I can claim. Whatever is the holding period of the previous owner in this case, I can very much claim. So those scenarios are limited. The Act very clearly specifies, saying in inheritance, gift, will, partition, succession, in these scenarios, they prescribe that the period of holding of the previous owner can be taken. The cost of acquisition of the previous owner also can be taken. So this is the definition of transfer. I am not spending too much time over here. What is not a transfer? Okay, now let us come to agricultural land, because this is something which a lot of people have doubts about. Now, someone has asked in the questions, please clarify whether indexation is eligible from the original purchase date. Okay, it's a very good question. So now, let us assume in 2007, this property was purchased. I have got it in my hand in 2021 and I have sold it in 2022. When can I index it from? Will I have only 1 year indexation, or will I have indexation from 2007? So which will be applicable for indexation purposes? It's very, very clear that it is essentially you have held that property from 2007. So therefore your indexation also is applicable from 2007, even though you have held it only for 1 day. All the benefit, if your father had sold the property, the same benefits will accrue to you in this scenario. So it will be very much, the indexation will be applicable from 2007 itself, sir. Do not worry, you get a big benefit from the Income Tax Act. How long this benefit will be there, I don't know, because majority of you may have been following the news of late, where certain 2 major changes are expected in capital gains. The first thing that the government is saying, They want to rationalize the capital gain tax rates they're saying. So what they mean by rationalize, I'm little scared. If they reduce the tax rates, I will be the happiest person. But I am not convinced that that's what is going to happen. I have a feeling the tax rates are going to be increased. One. Now the second major change, and this is something which is not there out in the open, nowhere it has been publicly discussed. But one information that I got from the authorities who are close over there when it comes to drafting the tax laws is that one major consideration which is there is gift taxation. You see, gift tax was abolished a long time ago, but slowly later they brought in various forms in income from other sources under Section 56. Now, once again, gift between relatives, the specified relatives, is not taxable. So even if it is as much as gifting a immovable property also, it is not taxable. Even if I give 50,000 rupees also, it is not taxable. But now they want to tax gifting or inheritance tax also. So there is a big plan where gift tax wants to be brought into the act. So moment gift tax is brought, these provisions also will undergo a significant change is what I expect. Now please don't take my word for it, but this is what I understand. So generally what we are advising, any client who wants to gift certain assets to their children, or they want to go for settlement, or they want to transfer to family members in order to get peace of mind, all of that, you please try to do it before February of the next year, because in case these provisions come, then huge tax implications will be there. So that is something we have been advising. That's the only thing that I expect will be happening very, very soon, apart from changes in the tax rate. Now let us come to sale of agricultural land. You see, I saw maybe at least 5 or 6 questions are there in the chat box throughout my presentation, where a lot of people asked about the sale of agricultural land and agricultural income taxation. So this should actually clarify it. Now there are only 3 conditions when it comes to your agricultural land. What they are saying, the agricultural land should be in a municipality or corporation or cantonment board if it is in an urban area where there is a population of less than 10,000. So urban agricultural land means population should be less than 10,000. Impossible. Nowhere. If you take any road also in India, you'll have more than 10,000 people. Forget the entire municipality having more than 10,000 people. It is impossible to have here. Now let us come to the next scenario, what they are saying. So essentially urban agricultural land, you will never have the exemption for sale of agricultural land. So forget it. Now let us come to rural agricultural land. How do you measure this? So they have 2 criteria. One is they have a population, and then they have a distance criteria. Now, first thing is distance criteria. It has to be 2 kilometers away from local municipality. In that case, the population of that municipality should exceed 10,000, but cannot exceed 1 lakh. 6 kilometers means it can exceed 1 lakh. It should not exceed 10 lakhs. More than 8 kilometers means population should not exceed 10 lakhs. Very, very clear. Now, let us take the first thing. How will you measure this distance? Can I simply put the Google Maps and take the distance? So this is the property. This is the land that I want to purchase. Let me put the Google Maps distance from my house and or Google Maps distance from the next area, wherever the municipality is there. Is that enough? If I check the Google Maps distance, if it is more than 8 kilometers, then straight away agricultural. Is that enough? Yes or no? Yes, that is enough if you take the Google Maps distance. Or should I do something else? Now here there is a very, very important thing. As rightly pointed out by both the Shyam and Satish and few others, you have to take what is known as the aerial distance, which means suppose I am going to one land, take diversion. Our Indian roads are very famous for various diversions suddenly happening. So if there is any big diversion that suddenly comes up, then unfortunately, whatever should have been 8 kilometers or 5 kilometers will become 10 kilometers. Then suddenly will that make the land agricultural? You cannot change based on what diversion is there, what is happening in the road, etc. So here they have made it very clear. It is the aerial distance, or what they say, how the crow flies. So it is the aerial distance that you have to measure. And that brings me to a very important aspect. Like 2-3 people have asked me the moment this question I asked. Sir, how will you measure this aerial distance? Should we take helicopter and fly and check the aerial distance in this scenario? So you don't have to take any helicopter at all. The government has already done the measurement. In fact, in the income tax website, if you have certain areas are there in the income tax website where you can go and check, I think in maybe 2014 or 15, income tax itself have taken the effort of measuring the aerial distance, and they have specified for each area from the most recent or the nearest municipality that they can find. Not every area is covered in this, but I would say majority, at least 70 to 80% of villages, etc., are covered under this income tax website. So you can go there and check the area distance. It is there on the income tax website. I'm not talking the ITR filing website. Go to the income tax department website. Under resources there, you can find this. So this is one thing. The next that they ask, can we draw a straight line to and from in the Google Maps? Will that suffice? In my view, it is okay, but you should ensure that the kilometers are done correctly. Because if there is any marginal change, it can impact whether it is agricultural or not. So if the distance is very, very clearly more than 8 to 10 kilometers, then very confidently you can take it. But if there's any mistake, you could face the issue of being treated as a regular land and huge tax will be faced. So yes, drawing a straight line most likely should be okay, but try to go and check on the income tax website first, then you can get a decision from there. Or the next question I can ask related to the same aspect. Where do you take the line from? If we take a municipality, you have a border, no? Like if you take Andhra Pradesh or Tamil Nadu, there is a border over here. So from where you will take it, which border? Can you take it from any border? So nearest municipality, whatever border is there in the corners, do we take it from there? Or should we take it from the heart of the state or the heart of that municipality? Can I take it from the heart of the state or the middle of the state over here? Because that only seems reasonable, no? If you take from any border, means it can be very far away. So where should I take it from? As rightly pointed out by majority of the persons, it should be taken from the end of that municipality. So from the border you have to take. If you take Tamil Nadu or Andhra, you have to take it from all the borders and see which is the nearest municipality from each border end. So therefore it becomes harder over there. If you take from the middle, it may be difficult, but you have to take it from the border of the municipality. So it makes it harder because municipalities will be closer to you. So you have to see the distance from the border of the municipality. Now, next point is the population. How do you take the population? Should I go and count, sir, how many people are there? So you have to take what is the latest census population of that particular area by the latest census. I'm sorry, I said census. The latest census. So the latest census which is there right now is still 2011 only. Normally every 10 years we do a census. 2021 it should have been done, but I think it's in process because of COVID there was delays. So right now the census that is publicly available is only 2011. So you can use the 2011 census and whatever population is there as per that you can use it. That is how you measure it. Now let us come to the next important question that I have for you. I have an agricultural land and my land complies with whatever we discussed now. Whatever distance, yes, it is more than the distance. Whatever population, it is definitely more than the population, don't worry. So therefore, it is an agricultural land. Is that enough? Are these two conditions enough? Or are there any other conditions that have to be satisfied? Are there any secret conditions? So let us take a scenario. I'll give you an example. I have an agricultural land, population criteria met, the distance criteria has been met. But I am not doing any agricultural activity on it. It is just a vacant land. Does that mean I can sell it? A controller officer says the land should be used for agricultural purposes in the last 2 years. So that is only for section 54B. Only if I am claiming 54B that question comes up. If it is rural agricultural land, it is not taxable at all. Where is the question of 54B? 54B is meant for agricultural land, which is taxable. So here, once again, I am asking you, if I am satisfying the population distance criteria, is it enough to be agricultural land? So here, interestingly, while the law is very clear, the law says only these two. Income Tax Act says only these two things. Agricultural activity comes only when you are claiming agricultural income or you want 54B. It does not come up for determining agricultural land, whether it is a capital asset or not. Unfortunately, the secret condition is now being examined. They are expecting that agricultural activity should be taking place. Because I will give you another section. I will give you another example rather. I told you in the first scenario, I have agricultural land, no activity is happening there. Can I claim it? Let us assume yes. Now let us take a next situation. I have agricultural land, satisfies population and distance, etc. Now here, there is some business work happening. Whenever I want, I am doing some business activity there. Now straight away you will get suspicious. Oh, he's having business activity there. But as per law, only satisfaction of criteria is required. I have satisfied. How does it matter what activity I am doing there? Third criteria, I have a manufacturing business itself there. I am making cars in that same agricultural land. I am getting huge income from cars. I am selling that factory also along with my land. Is it agricultural land here? Immediately you will all say, no, 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 it is not agricultural land. But sir, the law has not changed. Law still says distance, population. That's the only criteria you need to satisfy. I am satisfying both. Nowhere in the act says if factory is there, you should not allow. That is not said. But once again, as I told you, they are specifically requiring that these criteria have to be met. And one of the biggest reasons for this, my dear friends, is one very famous decision called Sarifa Bibi Ibrahim, which came out in 1993. So here, very surprisingly, this decision is not binding. Please note, before I start discussing this decision, I have to tell you very clearly, this decision is not a binding decision. This decision brought about 14 indicators to do a test whether it is agricultural or not. But in the end, the Supreme Court said it is just an optional test. You can check whether these conditions are satisfied. Maybe these conditions you have to examine. Even if they are all satisfied also, you can treat it as agricultural land still. Or if nothing is satisfied also, you can still treat as agricultural, whatever. I leave it to the discretion. But you can do these tests. Like that they have said in Sarifa Bibi. The reason I am telling you this is because all the cases pertaining to sale of agricultural land today, every single case, the income tax department is quoting this case law, saying Sarifa Bibi Ibrahim held by the Supreme Court. So I want to tell you, if you say Sarifa Ibrahim, Supreme Court, do not straight away accept it. Because now, Sarifa Bibi Ibrahim, what does it say? It asks you to check certain other things. You have to check whether land is classified as revenue as per agricultural records and whether it is an agricultural land not converted into a factory land. You have to check this first, or not converted into non-agricultural land. Second, you have to check whether ordinarily used for agricultural purposes or not. So suppose whenever it's time to sell the land alone, I grow some agricultural activity there. I'm saying, see sir, so many crops are there, so many agricultural activities are there, therefore it's agricultural nature. For 1 month only I'm doing, just before the sale. Then they are saying, you have to check whether there's a long gap between it is being used for agricultural purposes or whether it's a stopgap arrangement that they are doing this. Next they say, you have to see whether agricultural operations commensurate to the investment made. I am spending 5 crores and purchasing on agricultural land, and I am getting income from sale of coconuts of 1,000 rupees per month. So they are saying, is it a rational agricultural operation which has been carried out? Is it proportionate? Is it reasonable? These activities they want you to check. Then they are checking whether it is temporarily used or permanently used as agricultural. Then they're saying whether land is situated in developed area. If I have agricultural land and around me, so many developed areas are there. Factory is there, residential property is there, commercial property is there. Then therefore, it becomes non-agricultural in nature. Then other criteria are also there. Like this 14 criteria are there where they want you to examine. But please note, these criteria are not compulsory. They are definitely not compulsory. In fact, there are certain decisions where it has been held. It is enough if there is some form of agricultural activity happening there. You need not satisfy all of these requirements. In fact, as recent as last year, the Madras High Court have given decisions in favor of the assessee, saying not all these conditions have to be satisfied. If some of them are satisfied, it is enough. So one assessee, what they said? They said, I'm doing coconut plants, sir. You please see the corner of it. They have a big house in the agricultural land. No agricultural activity. They just have some coconut plantation at the corner of the house, like a garden. So Madras High Court said, oh, very nice. You have agricultural activity there. Please allow sale of agricultural land. So this is the sort of approach they had. In the same case, same Madras High Court, less than 3 months before this decision, They said that no proper agricultural activity is happening. So therefore it is not agricultural in nature, and they disallowed it. So you have such a variety of decisions really in the same Madras High Court, certain conflicting decisions are there. So therefore we must be very, very careful when it comes to taking this decision. But please note, if they quote Sarifa Bibi Ibrahim, do not think it's a Supreme Court decision, our case is gone. Please quote all the Madras High Court decisions. I don't have it on this page, it will be there later in the presentation, but I will update this PPT and I will circulate it so that it will be beneficial to all. So I will give those decisions pertaining to sale of agricultural land also. I think I saw one or two questions which had come. So, but certain citations are there that usage of land is irrespective. Yes, Satish, you are right. Unfortunately, majority of the cases now, they are checking the usage of the land, but nowhere in the act it says, I can be very clear, nowhere in the act does it require you to check the usage of the land. But it is a judge-made law today. Various judges are checking it, seeing whether really it is agricultural in nature or simply the land is classified as agriculture and it has been sold for a huge profit. So they are checking all these aspects. So Shyam Sundar has said only usage. Small break. No, not required, sir. We will wrap it up earlier. I don't need a break. 3 hours is a reasonable time for us to complete. There is registration of the land done in square yards instead of acres have any bearing on taxation of agricultural land. In my view, it does not. But I think once again, this is a very Andhra specific issue where if it is changed, they are taxing it. If I'm not wrong, this is an issue which you are all facing there. Because once again, this was asked by me in one of my earlier sessions also, where they said if there is a change, instead of having acres, if it is made square yards, then it will not be taxed as agricultural land. My view, that does not change. It is the nature of the land that you must check. In fact, the law says you have to check only population and nature. As long as that is satisfied, it is enough. But I understand that once it is made into square yards, in Andhra, there is a lot of taxation issues which are coming up. Should it be used for agricultural purposes last 2 years? No, sir, not required. But they are checking when it comes. The law says it is not required. But yes, they are checking that when it comes to the factual things for allowing it. Okay. I think I covered most of the questions pertaining to agriculture. But if there's anything else, you can just put it up. I will take it up. Okay, sale consideration. Nothing major here. I think these aspects you're all well aware of it. Okay, one important aspect I'll ask you. So now you have section 50C that we are all aware of. Before that, one more question has come. For urban agricultural land, 2 conditions is there, no sir? Yes, it is there. Very much it is there, but that is for 54B, Anil sir. That 54B, if you want to claim, because it is agricultural in nature, it coincidentally happens to be in an urban area. If it is rural, means straight away, once these conditions are satisfied, you get the exemption. So let us take a scenario where this condition 1 is satisfied, but condition of population is not satisfied. Then in that case, it becomes a taxable agricultural land, whether you are doing agricultural activity or not. So even if I'm genuinely doing agricultural activity there, if I don't satisfy the twin criteria, it no longer becomes a rural agricultural land. So therefore, in this scenario, what relief can I give the genuine farmers who are having the benefit of agricultural income, agricultural land, but it is not classified for the purposes of a capital asset? That is why 54B is there. So in order to take that benefit only, they are checking is whether the last 2 years it is used by you or your fathers or your family members for agricultural purposes, all that will be checked. Now coming back to the question on hand, 50C. Now we all are aware of 50C. 50C is when the guideline value is there. Let us assume guideline value is 50 lakhs. I have sold the property for 40 lakhs. Then in that case, 50C says that minimum guideline value you have to offer to tax in order to stop all black money transactions. That is the origin of it. Now, if I don't agree with that, if I feel the value of the property is actually lesser than the guideline value is 50. In my view, property value is only 40 lakhs. So I have got whatever is the market value. So here, what option do I have? The first option, I can dispute with the stamp duty authority itself. I can raise an issue there, the respective sub-registrar, and I say that it is overvalued, the stamp duty. So I want a lesser value, I can make an application and I can take up that matter. Secondly, I have another option. I can refer the case to a valuation officer. So I can refer the case under Income Tax Act. I can tell the assessing officer to refer the case to a valuation officer who will come and check the actual value of the land to see whether all these conditions are satisfied or not. So once these conditions are satisfied, straight away he will say that yes, condition satisfied. So therefore, I determine the value to be 40 lakhs only. So it is all correct. Let us take another scenario. What if this valuation officer comes in and determines the value, saying that he has got for 40 lakhs, guideline value is 50 lakhs. I am saying the guideline value should be 55 lakhs. He says the fair market value is 55 lakhs. So here, what will be the value under sale consideration under 50C? Under 50C, as rightly pointed out by many people, the value will be 50 lakhs only. It is a beneficial provision. So therefore, what is the stamp duty value will be restricted to that. Even if he comes and tells, sir, what you are doing, guideline value is actually 95 lakhs. Even if he says it is 95 lakhs, it will be only 50 lakhs over here. Now here the next question, what if he comes and says the value is 35 lakhs? Can I take it to be 35 lakhs when I have received 40 lakhs? No, I cannot. Whatever minimum I have received, I have to offer. So if he values it lesser, it is unfortunately I have sold it higher rate. So therefore I have to accept. Now here is the very, very practical question. I think somebody has asked in the questions. Sir, let us take the same scenario. When do you have to file the return of income? Before 31st of July. Let us assume it's an individual. So before 31st of July, you have to file this return of income for this person. So you have to offer whatever under 50C or whatever is the valuation officer value. You have to do it at the time of filing the return of income. When can you make a reference to valuation officer? Normally, it is done during the course of the assessment proceedings. You can do earlier also if you want to, but then you are inviting scrutiny. So normally when you do during the course of assessment. Now let me ask you a question. One assessee is there. He is one pakka fraud. Let us assume this assessee is one pakka fraud. It is a time barring date. So 31st of December, they have to pass the order. On 28th of December, what this assessee does, he comes to the assessing officer and he says, sir, I want a reference to valuation officer to be done. Assessing officer said, I can't do it at this point. I missed my time barring date. He says, I don't know. I want to you figure it out like that. He says. So in this scenario, can the reference to the assessing officer or reference to a valuation officer be denied because he is trying to cheat the income tax? So here's a very, very important point. Where a reference to a valuation officer is being made by an assessee, the assessing officer is duty bound. He is duty bound to provide this opportunity. He cannot deny you the reference to a valuation officer, even if it is getting time bound. He may say he should have asked long before, but he cannot deny it. So the assessing officer has no right of denial. Where a valuation officer is sought for by the assessee, it must be provided without any fail. It is mandatory to be provided. So please note there's a very, very important point. Somebody had asked this question. So you can make a reference to a valuation officer at any point of time. Even before filing the return also, you can ask for a valuation officer. But normally you do it in the course of assessment. And whenever you ask for it, it cannot be denied by the income tax department. They must mandatorily provide you an opportunity to make the reference to a valuation officer. I saw some more questions. Somebody had asked, landowner gave his agricultural land to developer for converting plots under 50-50 ratio. Agricultural land given to developer. Is capital gains applicable to landowner pertaining to JDA relating to plots? Here is a very interesting thing, because if the JDA is taken in the nature of a business, if it is taken in the nature of business, then unfortunately you will have to pay the tax on it. Only for capital asset you have this exemption. That rural agricultural land is there only if it is treated as a capital asset. If it is treated as stock in trade, you don't have this exemption. So you have to carefully plan this such that it is not treated in the nature of the business. Then you can take this benefit. But if it is treated in the nature of business, the entire amount will become taxable for you in the under business income. So be careful about it. Definitely you can take the benefit if the JDA is structured properly. Sir, income from other sources. What? Sorry, I cannot understand the question. Income from other sources also in the hands of buyer. Okay, I understand. Okay. So what sir is asking is that under 50C, We all know the provision. 50 lakhs guideline value, 40 lakhs I have purchased, 50 lakhs I have to offer. Very straightforward. What about 56,210? This 56,210 is one very, very unfortunate provision which has come, and I have hugely objected to this. It's very, very unfair. What they have said, the buyer of the property now is purchasing a property which is worth 50 lakhs for 40 lakhs. Seller has offered under 50C, already no problem, no dispute. But buyer also, 40 lakhs is purchasing a property worth 50 lakhs. That 10 lakhs rupees is like a gift. It's a benefit to him. It is almost like a gift. So therefore, he has to offer 10 lakhs under income from other sources. The person already life saving is put and purchased one property. Great difficulty is found the property lower than the guideline value. Here he is purchased at 40 lakhs. 10 lakhs additionally is getting income apparently, notional tax. Highly unfair tax. Highly unfair. So here also, the buyer can also make a reference to a valuation officer. If he feels the value is lesser, he can also make a reference to a valuation officer, and that decision will be binding. So he can definitely do it. There's nothing unfair over here. You can also make a reference to a valuation officer as a buyer. But the provision itself is highly unfair. I personally strongly feel that it has to be struck down. That this is a very unfair law, especially when it comes to immovable property. We are discussing several lakhs in values. So it's a very unfair law, and I hope that it will be considered and modified substantially. So these are all issues I think we have dealt with. We will maybe take up one or two cases, practical cases when it comes to reinvestment, and we can maybe take up a few more questions and wind up. So let us just see. Okay, section 54. I think you're all aware, section 54, where the asset transferred is a residential house, long-term residential house. Then the reinvestment can be made. It is enough if you reinvest the capital gains in a new residential house, either 1 year before or 2 years after in case of purchase, or 3 years after in case of construction. Now here, let me ask you certain practical questions, or let me finish the other things also. 54 EC is the asset transferred as a long-term capital asset. Can you tell me here, is it any long-term capital asset, or is there a restriction over here when it comes to 54 EC? Can any asset be transferred long-term in nature and you can claim 54 EC? That was the case. Unfortunately, Shyam sir and few others who have told yes, that was the provision till a few years back. It was once again modified. Now the asset transferred must be an immovable property, either land or building. You cannot sell gold, you cannot sell painting and claim 54 EC. It must be an immovable property for you to claim 54 EC. So therefore 54 EC says you can reinvest in a REC or NHAI or notified bonds within 6 months from the date of transfer. That is a very important point. Within 6 months from date of transfer, but there is a lock-in period for at least a period of 5 years. At least a period of 5 years, it has to be locked in. Earlier it was 3 years, now it is 5 years. And there is a ceiling limit. Unlike 54F, unlike 54 EC says maximum 50 lakhs on the capital gains only you can reinvest. 54F is almost similar to wording of 54, except 3 very critical changes. First one, under 54, the asset sold must be residential house, but under 54F, it should be any property, any capital asset other than a residential house. So here it can be land, it can be gold, it can be painting, also no problem. Here reinvestment should be made 1 year before or 2 years after, that is the same. Here the new investment also should be a residential house, same as 54, but one criteria. On the date of transfer, the assessee should not own more than one residential house. Earlier, the provision said a residential house. Now they have modified it to one residential house. And they have said what must be reinvested is the sale consideration. Under 54 and 54 EC, it is the capital gains. But under 54F, they expect the sale consideration to be reinvested. Now here, let me ask you one question. Let us take a scenario. I am assessing. I have a house in an apartment. I have 2 houses in the same apartment on the same floor. What am I doing? I am selling my land. I am buying the 3rd house also in the same apartment. Same apartment. I am purchasing a 3rd house. What I am doing, I am breaking the walls and making it all the same house. Now, can you tell me here, do I satisfy the criteria for 54F? Asset sold should be other than a residential house. I am satisfying because I am selling a land. I should reinvest 1 year before or 2 years after. That also I am satisfying. New asset should be a residential house. Yes, I am satisfying. Sale consideration, that also I am satisfying reinvestment. But assessee should not own more than one residential house before the date of transfer. Am I satisfying this? Yes or no? Because 54F says I should not own more than one residential house. In this case, technically I own 2 houses, but then I have broken the barriers and I made it 1 house. So is it 1 house or 2 houses? So now straight away you see so many different answers coming. Many people saying yes, it is 1 house. Some people saying no, it is not 1 house, it is multiple houses. So here, just like our answers, the cases are very, very varied across the country. Various high courts have held it differently. Some high courts have said, as long as there is one common entry, it is considered to be 1 house. Some decisions have said, it says 1 unit. It does not say 1 house. Sorry, it says 1 house. It does not say 1 unit. The law says you must not own more than 1 residential house. It is 1 house, it is 3 units. So therefore you can allow them to claim. There are some other decision that says you must see how many agreements are there, how many deeds are there. If there are multiple sale deeds, then therefore it is considered to be each separate. If there is, some decisions say you have to see the electricity meter, how many electricity meters there. Some other decision says it doesn't matter if the house is in 16th floor and 1 house is in ground floor. You forget the same floor. If you are having a house in 16th floor and you are having a ground floor in the same building, then also okay. Bajaj Tempo, liberal Supreme Court decision is there from 1970s, 1960s, very old decision where they say you have to be liberal when it comes to these provisions. Allow them to take whatever exception as long as they substantially comply with the law. So Bajaj Tempo is there, you can claim and take it, no problem. Some other decisions, as rightly said by Satish, they say you have to have a single kitchen. As long as single kitchen is there, I can buy that entire building also. 1 kitchen is there means I can say it is 1 house. Because a lot of joint families are there in North India, that structure, where multiple families stay in the same house, but they have 1 kitchen. So they all eat together. Only for staying in separate rooms they go, but essentially it is 1 house. So therefore they have held that these are the various scenarios. So to answer my own question, I don't have one answer. So you can always, as an assessee, naturally, we will say it is 1 house only. So you can use all those decisions in my slide. So to support your argument over here. We can take another issue over here, which is, let us take a scenario here where I decide to purchase a residential house. For example, the building that I am living in, it took them many years to construct that house. We have purchased it, we have booked the flat, but it took them almost 7 years to complete the construction. So let us assume Kota Janardana sir buys a property, he sells a residential house, he reinvests in a residential house. This residential house that he is reinvesting in, he has booked it, reputed builder, he has booked through a very reputed builder, and this reputed builder is taking 6 years to complete it. Can I claim capital gains over here? Because here it very clearly says, the law says 1 year before or 2 years after for purchase or 3 years after in case of construction. How many years we have taken in this scenario? 6 years has been taken. Can I claim under 54 or 54F? Once again, I'm getting so many varied answers. Some people saying yes, some people saying it should be constructed within 3 years. Yes, but total amount should have been paid. Some people saying money should be given to the builder matters. So here, sir, who is saying total amount should be paid? Whether for the purposes of the 20% tax, you will give the full money to a builder who is not completing your house. Whether you will do it practically, maybe for tax purpose, you will advise you pay within 2 years, sir, to claim the capital gain. But that is 20%, sir. By giving to a builder who is not completing, you will lose the 100% of the money. So here is very, once again, multiple decisions are there in my presentation. I am not going through each decision over here. It is all there, but I'm taking you through the principles and you can apply it accordingly. So here there's a very interesting distinction which has been made. Suppose I have control over the construction. Let us assume I have sold residential house or land. I am reinvesting in the construction of my own house. I have a land or I'm purchasing a land and I'm constructing a house on that. I am calling the contractors. I am calling people saying, come, you come for doing the cement work. You come and do the plumbing. Like that, I am calling various contractors and I am constructing the house. Then I am saying, you don't come now. The prices have gone up because of Ukraine war. Prices have gone up very high. We will come again after 6 months. So you wait. And after 6 months, when they come, COVID lockdown happens. So I say, COVID risk is there. Lockdown may have been lifted, but better you stay away for another 6 months, I am telling them. So like this, I keep delaying and it goes beyond the 3 years. In this scenario, they have said that I cannot claim it. 3 years period is over. So you cannot claim it. So I have control over the construction of the property. So therefore here the delay is attributable to my end. Or let us take a scenario where house is completed. I have entered into the agreement to purchase the house, but I have failed to make the payment. I have failed to make the payment even though the house is ready. Then in that case, or I have delayed it, then in that case, I have defaulted under 54 or 54F. But where I am giving to a reputed builder or any builder for that matter, where I don't have a control over it, he is a developer or he is a builder. I am giving him the money and he is delaying it. Then it's highly unfair to say that I have not complied with the law because I have complied. So here, interestingly, they have held in the favor of the assessee. Bajaj Tempo, be liberal. So they have said, as long as the assessee does not exercise control over such construction, then he has complied. Please allow him the benefit. Do not restrict. So whatever payments he has made till that date, you please allow him to claim it. As long as it has been made within that period, you allow him to claim it is what they have said. Now let us come to the next issue over here. And I think somebody has also asked this in the chat box. Let us take a scenario where I have sold a residential house. I am reinvesting in the name of my spouse. I am reinvesting this property in the name of my spouse. Can I claim this as exemption? Can I claim this case as an exemption over here under 54 or 54F? I am selling the property. I am reinvesting in the name of the spouse. So many people saying yes, 1 or 2 no's I am getting, but majority everyone is saying yes in this scenario. Yes, I can do it. Some people saying no, more confidently no answers are coming now. So here interestingly, there is a split in the law. Not every law is the same. Various decisions are very different. Now there is a Madras High Court decision, very famous decision called CIT versus Natarajan. Everywhere you will see this decision also. And Delhi High Court also in one case called Kamal Vahal, they have held the same thing, where they have said that yes, an assessee can invest in the name of the spouse and claim the exemption, no problem. But let us take a scenario where the wife or the spouse is an independent assessee. The spouse is an independent assessee in this scenario. She has her own income. She has greater income than the other spouse who has sold the property. And that person we are reinvesting in that person's name, either husband or wife. So you reinvest in their name and you will claim the exemption under 54. But can you tell me who is going to show the house property in their returns? Where the spouse is not filing the return of income, then no problem, there's no implication over here. But what if that other spouse is an independent assessee who is filing the return of income? Can you tell me who has to show the income from house property? Is it me who has made the reinvestment? Or is it her who has reinvested it in her name? We all studied first slide, first issue that we took up almost 2.5 hours back. The first issue that we took up is the ownership is the basis for taxation under income from house property. Here the owner is the wife. The buyer, the original reinvestor is the husband. But here the owner, the property is in the name of the wife. So who has to file the return? Who has to offer it? Sir, clubbing provisions of the law. Don't forget clubbing provisions. Here the husband is technically the owner of the property because it is his funds that has been used for the reinvestment. So under clubbing provisions, it is the husband who should be subject to tax. But once again, can I ask you one more question? The same husband sells a land, another land, maybe 2 years later or 1 year later, he sells a land. Now he wants to reinvest once again the proceeds of the land in a house property. Here, will you consider the original reinvestment in his name or in the wife's name? Will you consider the original investment? Because you all know 54F, there is a provision, not more than one house property. Yashwant sir says it will attract Benami Act. No, sir. Husband and wife, no Benami, sir. There's no issue over here. No need to go that strict. You will be suitable for principal commissioner post if you are that strict. So here, coming back to the question, can you answer me when you are coming to 54F, that person, once again, the same husband selling a land, once again, he wants to reinvest under 54F. There is a provision, no, associate should not own more than one residential house property. Here, what will happen? So therefore, once again, there is an issue over here. So here, I want to be clear. The law is not clear. There is one Delhi tribunal decision which is there, and one in Punjab and Haryana, where they said where the assessee, the spouse is an independent assessee, then in that case, she cannot reinvest in her name and take the provision benefit under 54 or 54F. But if she is not an independent assessee, you can do it. But in my view, as long as you follow substance over form, for 3 years, it is essentially your property. It is clubbed with you. You have to show under 54F, you cannot transact with it. It will be considered to be a one house. Then after that, in my view, this is not as per any judge-made law, and it's not as per any decision. In my view, once the 3-year criteria is satisfied, then it is the wife's property, is what I feel. And if those conditions are satisfied, I believe once again that person can claim the reinvestment under 54F under his name. Why 3 years? Is because you know under 54 and 54F, the new property must be held for a period of 3 years. So therefore, in my view, as long as the 3 years is satisfied, then it is considered to be the spouse's property and no longer the original husband's property. Now, okay, one more interesting issue, last issue we will take before we take certain questions and wrap up. Last issue. Let us take a situation. Let us once again, I'll open the provision of 54 and 54F. The asset transferred must be a residential house. The reinvested asset should also be a residential house. Now here, when we say residential house, can you tell me whether it is residential house means the nature of that asset or the use of that asset? I am reinvesting in a residential house. That house has been converted to a school. On records, it is a residential house only. But for all practical purposes, they are using it as a school or they're using it as an IT company. I am purchasing this. Can you tell me here, is it residential in nature or is it commercial in nature? So is it a residential house or is it not a residential house? So should I see the building is a residential building, but the use for almost 25 to 30 years is that it is being used as a commercial complex. So can you tell me here, will it be residential or not? Electricity bill is residential. Usage is done as commercial. Electricity bill records everywhere, it is showing residential only, but usage is done differently. So here, once again, I see in all the answers that are coming, various different answers. Some people are saying usage matters. Some people are saying that it is the nature that matters. So here we have two very conflicting decisions. You have the Delhi 8080, you have the Hyderabad 8080, and of course recently you have the Karnataka High Court also. So here in Hyderabad 8080, unfortunately majority of you may come under Hyderabad 8080. They have said the nature matters. Well, in my view, the nature is good. I agree with the Hyderabad 8080. I'll tell you why. So many of you here as chartered accountants, you practice out of your house. Many of you do business out of your house or you do your practice out of your house. You don't change the nature of that building into a commercial building. It's still a residential property. You're just having an office over there. So let us assume I'm an associate who starts a business. Today I start the business on my ground floor. Tomorrow I'm making it a residential house because business does not take off. After 3-4 months, once again, I decide, okay, I'll start a new business. So I start a business in the same place. Then once again, after 4 months, I'm shutting it down. I'm saying, what business? I'll use it as a house only. Then I decide I will take my COP. I will start practicing once again. So I start practicing after 5 months. So in a span of 1 year, in a span of 12 months, the nature of that property has changed 4 or 5 times. So therefore, how will you determine if you are telling that it is the usage? If you are telling the usage matters, The usage of the property has changed multiple times in a span of 12 months. The nature is still residential because it has kitchen, it has toilets, the way it is structured as residential, the building is also done as a residential house, etc. So in all practical purposes, in my view, you must see the nature because usage can keep on changing. In the span of same 12 months, multiple times the usage has changed. So my personal view that it must be the nature only. And like luckily for us, Hyderabad ITAT have also held that you must see the nature only. But recently, the Delhi ITAT and Karnataka High Court says that you must see the usage. So at the time of purchase, you must see what is the usage of the property. So if it is being used commercially, then therefore it is a commercial building, it is not a residential house. So you cannot claim residential house benefit of 54 or 54F. So please be very, very careful when it comes to this, that you try to follow whatever is the jurisdictional decision for you. So in my view, you must take the nature. That is the only practical thing because usage can keep on changing. Nature only must be verified is what I strongly feel. But as I told you, there are certain other jurisdictional decisions which are there. So as rightly pointed out by somebody, Shyam Sundar has said, you must see the jurisdiction. I 100% agree, sir. Now, CA Yashwant has asked, will the same principle apply if it is used as a CA office in a residential building? My view is the same, sir. It's the nature of the building you have to see if it's a residential building. For example, some of our branches at the institute, they are run out of apartments. Branches of our CA institute, if you take even one of the branches near Chennai, it is run in an apartment actually. They take 4 or 5 apartments and they are running a branch or CA institute branches there. So therefore, you cannot change the nature of that building, even though it is used. Suppose somebody comes in, we see they are building a building for their branch now. So suddenly they have to let it out, or let's say they sell it. Let us assume they are the owners and they are going to sell that building, wherever they are staying, those flats they are going to sell it. The new person comes, he is not going to use it as a branch office. He is going to use it as his own residential house. So in that case, will they say, oh, it has been used professionally, so therefore you cannot claim as residential house. My usage is going to be residential, or I may change the usage. You must see the nature is my view. Then I strongly feel about that. So, of course, there is a Madras High Court thing saying that Ramesh Rauf, where it says 54F cannot be denied on the assessee subsequently changing the nature of the property. So I purchase a residential house. Immediately after purchase, I am using the ground floor as a kitchen restaurant. I am using it. So therefore, suddenly when they come to verify under income tax, when it's taken up for assessment, they said nature it is a commercial property, but at the time of purchase it is residential. So it was given in the favor of the assessee. So I think with this we will wrap up. Maybe take up a few questions because the PPT has a lot more points and it's already 7:30. I'll be more than happy because many people through the presentation they kept asking if I'll share the PPT. I'll be more than happy to share the PPT. I'm giving my contact details also here. My WhatsApp number is there. My email ID is there. You can feel free to drop me a message. Some of you wanted to discuss some doubts also. You can feel free to reach out to me. I'll be happy to explain. So I'll just take a few questions which have come that I have not answered. Open site is transferred to builder. Builder allotted 5 flats. 54F can be claimed for 1 flat or for 5 flat values. As the word 1 is used in 54F. In my view, Pawan Kumar sir, you can claim for all 5. You can 100% claim for all 5. I strongly feel that. I strongly feel because Bajaj Tempo is there. Be liberal. That decision is like our God decision. Whatever favorite God you have, you please think of that God and you call that Bajaj Tempo. That Bajaj Tempo says reinvestment provisions under capital gains law are meant to be construed liberally. They are done to encourage the transactions. So therefore, be liberal with it. So in my view, 54F, 5 flats in the same building, please allow. We should not deny it. Sir, in case of purchase of land and subsequent constructions, can side-by-side sites be purchased in 2 separate sale deeds? In my view, yes. And there are some decisions, Venkat Karthik sir, where they are held that if it is a contiguous plots or contiguous apartments, in those cases, it must be allowed as 1. For all practical purposes, it can be considered to be 1. No problem. Even if it is 2 separate documents, it can be done to be considered 1. Is a farmer entered into an agreement for sale of his urban agricultural land, and the buyer converted the land into commercial land in the name of the farmer only before registration. and the buyer sold the land to third party. What is the tax implications for the farmer? I'll tell you an actual practical case that I handled. One of the auditors who had referred the case to me, the assessee was from Andhra, but the land that we were dealing with was in actually Tamil Nadu only. So what has happened? The assessee had a huge agricultural land where he had a lot of mango trees. He was not commercially dealing with it, but it was actual agricultural land. Actually, mango trees were there. And he used to give to family, relatives, auditors, everybody he used to give. So what happened? He sold the land to somebody who was interested in buying. That person has drawn up plots and he has sold it subsequently, and he has sold it as a commercial transaction. Case has been reopened after 5 years. By the time the reopening has been done, it has been more than 5 years after such transaction. And this person does not even know what has happened. Income tax have gone and taken photos of the site and they're saying, look, so much commercial activity is happening there, so much things. So therefore it is not agricultural. You cannot say it's exempt. Now, it's highly unfortunate because by the time the case had come to me, the assessee has not taken photos of the land. He has not been able to prove it is agricultural in nature because he does not have photos. He does not have the expenses incurred. He does not even have the mangoes, what is grown there. He cannot show that mangoes are grown. So many challenges we faced. Ultimately, we were able to convince the assessing officer when we went on appeal against the same. So ultimately, we won the case. But this is when I immediately started advising persons. If you are having agricultural land and it is genuine agricultural activities there, you are growing some plants, trees, etc., ensure you take photos of it. If there is any expenses pertaining to that, you are paying a farmer to manage it. You are paying somebody to be security over there. You are actually getting fertilizers, etc., to manage it. Take bills, even if it is handwritten voucher bills. Please get the bills. Please keep it on record to establish further that actual agricultural activity happened over there. So therefore, in this case, the farmer should not be taxed because what happens subsequently is not in your control. I have sold agricultural land. Whether that fellow makes it urban or not, whether he is using it for commercial properties, I have no control over. All I have control over is I am selling agricultural land. I used it for agricultural purposes. So please take photos, please maintain bills, very, very important because you have to establish the department it is agricultural in nature. Very nicely explained, thank you. Please share the PPT. Sure, sir, I will definitely share it. I'll share with the organizers. If you don't get it, you can drop me a message also. I'll be happy to share it, sir. Sir, whether renovation of old building claim for 54, yes, you can claim. Same building, I want to construct a floor, new floor I am constructing. You can do it, no problem. It does not say you must reinvest in a new residential house. It just says you must reinvest in a residential house. As long as the renovation, reconstruction, new floor is a residential house, you can do it how many ever times you want. So you can also become Ambani. You can reconstruct 49 times if you want. Well explained and articulated. Thank you, sir, for the kind words. Renovation of old building, eligible. Yes, eligible, sir, no problem. Sir, what is the permissible amount permitted to take cash? Sir, 269 ST, 2 lakhs is the limit. So if it crosses that, then you will be in problem, sir. But registration done by farmer to plot buyers. It is okay, sir. In my view, it is registration is a formality. Whenever department wants that part performance of a contract, they will say transfer has happened. So by then, department will say before the registration happens itself, transfer should have been happened. So in my view, once for all practical purposes, the transfer is done. Registration is a mere formality. If possession is transferred, substantial consideration is received, there's an agreement in writing. If these conditions are satisfied, it is for all practical purposes considered to be the sale is done. Registration is a mere formality in these situations. So I think with this, we have covered all the questions. Thank you very much for a very patient listening. Thank you very much for this opportunity to the organizers. It's been very beautifully organized and I love the interaction. People can feel free to reach out to me if you have any doubts and I'll be happy to help with the same.
Hey.
So,
yes, sir. CA Subbaraidu has raised his hand. You can unmute yourself and speak, sir. Subbaraidu garu, you can unmute and speak.
Sir, good evening. Mr. Abhishek, good evening.
Good evening, sir.
Sir. Mr. Abhishek, congratulations, sir. I have one doubt, sir.
Yes, sir.
Sir, in 2016, there is one JDA, sir.
Okay.
In November 2016. Okay.
Okay, sir.
In the JDA clearly mentioned as there is a position given. Position given. Ratio also given. Developer ratio and builder ratio given only. Simple ratio. 60-40.
Okay.
But the later CRDA permission given. Plan later obtained. And actual plan received in the month of November 2017. But here, even though on paper, develop position given in the 2016 November, in the paper, on paper only, as per Transfer of Property Act, whatever it may be, actually their ratio, that is a flat ratio also, the supplementary agreement also made in the month of 2017 November.
Okay, sir.
Only legal license given only 2016 November, sir. What I am telling is the legal license given only 2016 November, but without having the knowledge, they written as a position.
Okay.
Here the department taken as a, in the year 17-18 as a transfer. Of course, I filed appeal, but what is your opinion, sir? Because here they were given the permission.
Thing, because the property, whether it has got cancelled or whether it is they have finished the construction.
No, construction finished. NOC received 2022 April. NOC received 2022 April.
Yes.
The assets ready to pay the tax this current year.
Yes.
There is no dispute at all. But the only thing is that, see, after 1/4/2017, the section will be changed. The actual GD will be November 2016. Actually, the ratio of the builder and developer is 2017 November with bifurcation of the flats also. Here was the legal right given. See, to not enter into the property also, sir. Only the on paper to apply the plan only. But by mistakenly, knowingly or unknowingly, on the JDA clearly mentioned the position. That is only made a mistake.
But they will see substance, sir. In appeal, you will win the case. Because, he has not got any consideration. It is unfair to tax someone without any benefit. Some benefit he should have derived. Benefit is getting only in 2021. It is after all wording. Essentially, they have entered into an understanding agreement that whenever it finishes, they will get the compensation. Department cannot demonstrate within 1 year you have got the compensation. So no chance that it will be brought to tax that year, sir. You can demonstrate that you received the benefit only in 2021.
Yes.
Next year, you have not got any one benefit, whether 2017 or 18 also if they take. You as a person who has executed the power, you have not got any benefit while entering into JDA.
No benefit.
You will get only in 2021. As long as you demonstrate that, the case will be given in your favor.
Okay, sir. So one more question, sir.
Yes, sir.
Second, so the landowner given a JDA to Mr. X and received the 5 flats. Okay, sir.
Yes, sir.
And later to as a tax planning, he purchased 1 more flat.
Okay.
Okay, to claim the 54 F. See, the assessing officer not giving the exemption because you're already having the 5 flats.
Yes.
See,
yes.
what I am telling this, the 5 flats is taken as one unit.
Yeah, I understand.
No, there is no Vikrama case.
Yes, yes, yes.
See, he is not allowing 1 flat or not allowing the new flat also.
That is incorrect.
He is eligible for at least 1 flat. Na?
Yeah. It is allowed, sir. It will be considered 5 flats will be considered only 1.
So
no, use, no, I understand. You are saying that whether 5 will be 1 or it will be 5 separately. That is what
separately. Or new flat also. New flat also.
New flat also. No, it will be considered as 1. If it is in the same building or same floor also, new flat will be considered to be same. Part of that one.
What I am asking is out of 5, at least give me 1.
Oh no, okay, I understand. You're saying you're reinvesting in 5 flats, sir.
See, I have issued 5 flats, sir. Out of 5 flats, I want 1 is exempted. Requesting one is exempted.
Okay. No, actually, there is a catch here, sir. There is one requirement under 54A. which says that when you reinvest, there is a restriction on reinvesting on purchasing new properties. Actually, there is one restriction which says you cannot buy any other property for the next 2 years or 3 years. There is one restriction. You cannot construct or buy.
See, at the time of JDA, I have not received any 5 plots. At the time of JDA, see, as there is no site only.
If it is JDA, it is considered to be one, sir. In my view, it is considered to be one. We will take a scenario.
How 1 unit, sir? There is no Rukkanamma case, sir. The Rukkanamma case by 31/3/2013, previously 1 unit. Now there is a unit. See.
We will do one thing, Subrahmanyam sir. We will take this question offline.
Okay.
So we'll be able to maybe understand the more specific.
Okay.
So, because I think 1 or 2 other questions have come. We'll deal with that and we will take this offline. And
thank you.
Satish can connect with me and we will discuss in detail this case.
Thank you, sir.
Thank you, sir. Thank you, sir.
Thank you.
I'll maybe take 1 or 2 more questions have come. I'll just quickly take that before we wrap up. Property bequeathed by will during assessment year 2021. The property was purchased long back. Value 1/4/2001 will be considered. If sold in 21/22, purpose of calculating indexation. Shall I take index value as per 2021 as I became owner? No, sir. If it is come by will, and if you are related, you cannot come by will. Like Ambani cannot put me in the will, and then I cannot say it is will. So therefore, I am a relative. I cannot. If you are a relative, in my view, you can take from 1/4/2001 itself. No problem. No questions asked. So I think we've covered all, sir. All the questions covered. Can agricultural land be purchased as stock in trade? How to demonstrate? You can buy, sir. Why? If you're doing business of trading if you're doing construction or you're doing plotting or you're doing business of trading in real estate, you can very much purchase it as stock in trade. It is based on facts and circumstances of each case. So no problem. You can't take it. Housing loan taken for investment in house. No, you cannot. I think sir is asking whether 54 I can reinvest in repaying the housing loan. No. You cannot claim that. You cannot claim that as a reinvestment. You must buy a house. You cannot repay the housing loan and say that is reinvestment as per 54 or 54F. Cannot be done, sir. So I think we will wrap up, sir, after this because it's already 7:40 and we did not take the break. So I thank the organization and I hand over the session back to them.
Really a marathon session by Murali Garu, and he has taken so many questions simultaneously. And at the end of the session also, actually we thought that real estate transaction from income tax facet, but he has shown so many facets in the income tax itself. Really, really great, sir. Thank you very much. And over to Ravi Kishore Garu for vote of thanks.
Yeah, thank you, GSR Garu, for that opportunity. Actually, at times I strongly believe that capital gains and Abhishek sir are synonymous words. By this time, I think he had given lectures on capital gains at least for some 100 times or in 100 times, if not in thousands. So at times we will be receiving messages from him with regard to the seminar he is going to address at various places. Sir, you became a sort of an expert as far as capital gains is concerned. So in the recent times, you might be the only person who has given those many number of seminars on capital gains. Thank you very much, sir, for the elaborate discussions and also the various case laws which you have quoted. And also you said that you will be sharing that PPTs which will be very useful to the participants. And I should also thank the Central Council member CA Muppala Sridhar Garu, who has made time out of his busy schedule at the council and has given some insights into some of the happenings and some of the decisions taken at the council meeting. Friends, I also thank the AP chairmen who have coordinated so well in achieving a good participation for these VCMs, and also the participants who have participated in large numbers. Before we sign off, a quick programming note about tomorrow's session. It will be at 5 p.m. and the real estate transactions GST facet will be dealt by Sangu Ramakrishna. So friends, for now, good night, sign off, see you tomorrow.
Friends, one more announcement. CA Rajkumar Adukia sir, who is the CCM and that branch, that designer, is the program coordinator, is also joining us tomorrow by 5 o'clock, and he will be delivering his short message on the real estate transactions tomorrow. Thank you, Ravi Kishore garu. Over to you.
Yeah, thank you. We'll sign off for now, and tomorrow meet at sharp 5 p.m.